crore rupees. Foreign institutional investors flocked back to India, pumping nearly 4,671 crore rupees. FOMO seemingly is back on the street. Adani Group stocks surge in trade. Market cap rises by 63,000 crore rupees. Investors and analysts shrug off Financial Times allegations. Pro-incumbency wave across several states, says Union Minister Jaishankar in an exclusive interview to NDTV network. US markets fall as investors take profit, but Nvidia shines with a 9% rise. Now, what a day it was for the equity markets yesterday. A 370-point rise in the benchmark Nifty 50, taking it within touching distance of the 23,000 mark. But the question is, will we hit that 23,000 mark in trade today? After all, it's just about 33 points. The overseas cues are not the best, frankly. Let's, in fact, get you a quick check of what the global markets did overnight. Data in the US showed that business activity accelerated in early May at the fastest pace in 2 years, and that's according to a Bloomberg report. And that caused traders and market watchers on Wall Street to review their expectations of Fed rate cuts. In fact, Goldman Sachs Group Chief Executive Officer David Solomon said that he currently expects that the Federal Reserve will not cut interest rates this year amid an economy that has proven more resilient thanks to government spending. Yields across the board rose overnight. The Fed policy-sensitive 2-year yield rose more than 8 basis points to touch 4.95%, which is the highest since the 2nd of May. And meanwhile, rates across maturities were up at least 5 basis points, causing the yield curve to flatten. Now, equities in the US fell quite sharply across the board, the Dow losing 1.5% and the S&P 500 and NASDAQ losing 0.7% and 0.4% respectively. Let's take a look at the Asia-Pacific region as well. And in fact, the early rises, including the Nikkei 225 in Japan, was lower, and that continues to be the case. The Japanese benchmark losing about 1.2% right now. Hang Seng has opened in the red as well, but the onshore market in China seems to be holding on to gains, at least at this juncture. Let's talk about a few other updates, in fact, and we're also looking at crude, not because of a major development. In fact, it's the opposite. The fact that Brent crude is currently trading at just about $81 to the barrel, which is, if I'm not mistaken, very close to the lowest point in a month. It has seen, in fact, a 7% over the course of the last month. Mika is tracking the space and is here to tell you why, despite everything that's happening across the globe, crude prices seem benign. Morning, Mika. What can you tell us?
Yes, good morning, Alex. So that's right. You kind of identified the right theme. On the broader sense, you do see a tight supply market. However, the crude prices do not reflect that. Now, yesterday, Brent crude prices hit an intraday low of $80.93 per barrel, and prices are down 7.6% in the last month, and it's trading around the $80-81 range, and this is around a 3-month low, and prices have dropped 12% since their peaks. Now, the latest dip, why it happened? Because the oil market did show some signs of weakness, and this came ahead of the US summer driving season. Now, the upcoming Memorial Day weekend is typically the start of the peak driving period in the US, and investors will be watching out and kind of gauge the demand outlook. Now, according to Wednesday's report, the key storage inventories at Cushing, Oklahoma were at a 10-month high. However, the US gasoline demand did improve marginally. Now, when you talk about the whole market in general, now factors that do lead to a tight supply market is the OPEC plus production cuts, which are voluntary, of 2.2 million barrels per day, which are currently in place. Further along, the geopolitical tensions in the Middle East, at various parts and between various countries that do have a significant role in the oil supply. But however, the prices currently do not reflect that much of a geopolitical premium. But and when you talk about why the prices are at the lower end, it's one, the rising inventories and the lower demand projections on the back of a slow industrial activity globally. And this has not let crude prices go beyond the $91 per barrel mark in at least a month. month. Now, when you talk about the International Energy Association, the global inventories were up and they surged by 34.6 million barrels in March, and even the preliminary data shows that there are higher global oil stocks in April. And lastly, when you talk about the steady crude prices, they're also supported by the excess capacity in China, which is the refining capacity, given a slow economic outlook, and also the steady prices supported from more supply from the Americas.
Right, thanks for wrapping that up for us and providing the context. It's very closely watched, of course, Brent crude for us, and it has a big bearing, as you know, on the current account deficit. But for now, let's turn to the equity markets where all the action seems to be. And the question is, do we continue to see the march towards 23,000? We're not too far away. In fact, one critical figure to watch is going to be the foreign institutional investor behavior, because for the second session in the month so far, foreign institutional investors turn net buyer, and this is the largest net buy figure that they have recorded in the month so far. It is quite a substantial number of over 4,600 crore rupees. Now, it is going to be interesting whether or not this has something to do with positions that have built up over the course of the last few weeks. We are, in fact, going to also be talking about the last week before the monthly expiry. Agam is here to tell you about some of the latest cues in the F&O space. Agam, good morning. And the question really is, are the cues supportive to take us to that 23,000 mark?
Right. Alex, yes, the cues certainly are very supportive because things have changed, as you pointed out. There has been some amount of covering until maybe the session before. We had a substantial FII sell number in index futures. I reckon a lot of that has unwound yesterday, considering the benchmarks moved above and made new life highs. And with that said, at least as far as the futures are concerned, the May futures are now actually looking at fresh longs coming to the Nifty. Bank Nifty futures also saw a lot of change, and that's where we are seeing unwinding coming through, because Bank Nifty was a relative laggard. But that one, in fact, outperformed yesterday, moving up as much as 2%. Now, in terms of the overall options market, again, a lot of put writing coming through around the lower levels. That also brings us to your overall open interest distribution. And now 23,000 becomes a center point, with 23,500 as the higher end of the range for this week, and 22,500 as the lower end, based on your maximum open interest. Coming down to stocks, again, keeping an eye on a handful of them. So let's pull that list of stocks. There's a lot of shorts coming in, at least based on earnings. So Lupin, Sun Pharma, Page Industries under pressure. Among stocks which saw unwinding, let's pull that up as well. If we can actually take a look at stocks which are seeing a decline in OI. So ITC, Metropolis, Coforge are looking at short covering there. But all in all, a good day of trade, Alex, and I reckon that perhaps some of that strength could be seen in today's day of trade as well.
Interesting to watch. Thanks so much, Agam, for getting us those details. And you should watch for live coverage, of course, of markets when we open at around 9 o'clock, and also the build up to that. We'll be talking about how likely it is that we will sustain at these levels, in fact above 23,000. Let's shift focus to earnings then and talk about Interglobe Aviation. And it did report a strong set of numbers with a profit figure that was 100% higher than the comparable quarter. But perhaps more interesting to note will be a shift in strategy with the introduction of business class sometime this year. To talk about this more, we've got Mahima joining in. Mahima, inline set of numbers, but I think a lot of attention is going to that strategy shift.
Correct, Alex. So numbers pretty much in line with the estimates, and the profit has doubled and the revenues have also gone up by 26%. Now, in terms of financial highlights, before I move on to the strategy part, the yields have increased by 7% YOY, which stands at 5.19 per kilometer. They've reported a foreign exchange profit of around 1650 crores, which is a good number. The airline has shown a revenue per ASK which stands at 5.14, where cost per ASK stands at only 4.62, which has led to the rise in profits basically. The company's total debt has risen by 14.3, but total cash has also risen by 48% in this quarter. In terms of capacity utilization, where the aircraft capacity increased by 14% year-on-year basis, and the passenger carrying capacity has improved by 2.1%, and it stands at around 86.3%. 60% as of now, and market share also has risen to 60.3%. The total number of aircrafts as of Q4 ending stands at around 367. Now, in terms of the strategy shift that has been the talk of the town, the Indigo is set to launch a business class which will focus on selected routes. The routes will be unveiled by August of this year, and so this is the overall view of the Indigo results. So good set of numbers overall.
Much, Mahima, for getting us those details. In fact, it is going to be a very tectonic shift for a company that has been known for being a low-cost carrier throughout, and in fact a company that has reduced the size of its seats to incorporate more rows in economy. Let's talk about Hindalco then, and this is a company that will be reporting its numbers later today. We've got Kanika joining in to give you some perspective on what to watch out for. Kanika, what are the key levels to watch? Morning.
Good morning, Alex. So, as per Bloomberg estimates, Hindalco is expected to report low single digits fall in revenue, and its net profit is expected to rise by similar kind of low single digits. Now, what is driving this outlook is firstly its 100% owned downstream subsidiary, which is Novelis. It posted a strong and healthy Q4 beat, which was mainly led by higher volumes and improved pricing. Now, Novelis contributes 60 to 65% to Hindalco's overall revenue. Additionally, Novelis is planning to increase its recycled content to 75% by the end of the decade from its current 63% in FY24. Now, management of Novelis has also guided capex increase to almost 1.8 to 2.1 billion in FY25, of which 60 to 65% will be attributed to the Bay Minette project. Now, coming to demand trends, LME aluminum prices have risen over 20% in the last 1 year, and improved demand and rigid supply due to power shortages in China are seen to be pushing the market balance into deficit in the current calendar year as well as the next year. Now, what you can watch out for is firstly the size and timeline of the Novelis IPO. Secondly, rising LME aluminum prices, which are providing strong tailwinds to scrap spreads and are offsetting the tightness in the used beverage can supply. Also, benefits of Bay Minette project, which will be commissioned by the FY27 end, and Hindalco's captive coal mines are also expected to provide cost synergies. Finally, analysts are largely bullish on the stock, seeing a potential upside of almost 0.5%.
Okay. Oh, so not a very substantial upside, but several buys there. Thank you so much, Kanika, for getting us those details. Ashok Leyland is also set to report its numbers today, and Puneet is joining in to give you some key monitorables. Puneet, if I remember correctly, the commercial vehicle sales have not been terrible. In fact, they've been quite promising. What does that mean for the numbers?
Yeah, that's right. So we have seen some slight recovery in FY25, but for this particular quarter, revenues are largely expected to be flat. But the story of the quarter is going to be on margins. While margins are expected to rise by roughly 180 basis points compared to the previous year, this is because of cost optimization by the company that they've done over the last 12 to 18 months and operating leverage benefits. So on revenue, is expected to report roughly 11,400 crores of revenues, which is down 1%, while EBITDA is expected to up by 15%, margins coming in at 12.8%, and finally on profits is expected to rise 20% to 859 crores. Now revenues might fall, but because volumes have been slightly subdued for this particular quarter, but overall we see that higher average selling prices will aid the revenue growth, as well as for EBITDA, higher average selling prices as well as a higher mix of the defense business is going to be key to aid margins as well. When we look for the volumes of the quarter, this number is already out. We have seen that LCV sales have largely been flat, while MHCV has seen slight increase, but the buses segment has seen roughly 34% growth compared to the previous year. So that's one of the key promising factors, as well as margins being the top story here.
Yeah, back so pockets of promise. Thanks so much, Puneet, for getting us those details. We have to slip into a very quick break. We've got more stocks to talk about on the other side, so do stay tuned. Some people say, hey,
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is
moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money. Hello and welcome to India Market Open. It's the last day of the week and there's lots of weekend cheer on D Street after a fantastic, eye-catching, eye-popping rally yesterday. FIIs are back too. It looks, we're setting ourselves up for really new records, but, which you've already done. Yeah. But 23,500 inside, maybe not today, but at least in the near term from what analysts are saying.
Yesterday, when me and Taman were anchoring the closing show, we came 8 points adrift. And it was like a touch and go.
I was going to say the show yesterday turned into a reality TV kind of show.
It was like that, yes.
With, one of those amazing race things where you are distanced to 23,000.
Yeah,
so that was exciting. But the big question, of course, is does it sustain? Do you see some profit booking coming in today? And that's what we're going to be discussing on the show. I'm going to go through the global cues straight up because we have a very special guest coming up at 8:15 who's going to give you perspective of what's happening in the world, FII view, etc. We want to pack a lot of it today. On the top of the show, it's going to be an exciting day. So global cues were not great overnight. The US sulking a bit, at least the Dow sulking a bit. Nvidia, the only silver lining over there. The Dow was down over 600 points overnight. Couple of factors there coming in. The Fed minutes, like we discussed yesterday, have not been very positive because, you have enough officials who are afraid of inflation being sticky. Some even talking about maybe having to tighten, etc. So that has spooked. Clutch of data, slew of data came in, economic data pointing to a strong economy. So then the case for a rate cut becomes dimmer. Suffice to say, if you pull up the indices yesterday, all three were down in the red with the Dow getting beaten the most. Nvidia, like I said, bucked the trend, up 9% after stellar numbers, but that's not going to be quite enough. So what is the economic data which is spooking at least global markets, the US markets? One is the jobless claims number, which came in at 2.15 lakh in May, 18th week versus estimates of 2.2 lakh, so slightly lesser. The jobless data was down. Meanwhile, you had services and manufacturing indicators which were higher than estimated. So you saw bond yields inch up slightly, 4.47% on the 10-year. Brent continues to trend lower, as we have seen. Crude is generally lower, $81 a barrel for Brent. Asian markets, and let me pull that up as well, also in the red, actually hurting a fair bit, over 1% down on the Hang Seng and the Nikkei. Following cues from the US, perhaps. I'm going to just pull up the implied open very quickly and see how we are placed and what we're seeing. So we're seeing maybe an opening down in the red following global cues. Does our own domestic strength come in through the first half of trade today is what we're going to have to wait and see. But the big figure that the market was watching yesterday and all of us have been talking about since closing yesterday has been the fund flows. And I want to pull that up because FIIs turned buyers for only the second time in May. I think those numbers are flipped. Those numbers.
We're so used to reporting a sell
our
figure on
graphics team,
FIIs.
our producers, so used to showing FIIs as a sell number. It's automatically gone to red. It's green. So 4,671. crores was the buy figure for FIIs. DIs also bought at 147 crores on May 23rd. So
this graph, Tamanna, says what you want to say.
Exactly. So 2 times in all of May is when they've bought. Now, could that have been part of the reason that you saw a bump up yesterday, possibly short covering as well as another big reason that you saw once things seemed to turn, and perhaps more cheer on bond deals today because banks are actually open versus yesterday?
Yeah, just before we go into that, and if you're wondering what this Nvidia rally has done for you as an Indian investor, some of the top Indian mutual funds do have a significant exposure to the chip maker. So just to take you through that, and if these mutual funds are on your portfolio, you're actually in the money and you could be smiling your way to the bank. Motilal Oswal has an exposure of 463 crores to Nvidia, followed by Mirai, which is 284 crores. Franklin Mutual Fund as well holds about 127 crores of their portfolio to Nvidia. And Kotak Mutual Fund has an exposure of 188 crores. So if you have any of these funds in your portfolio, guess what? This beautiful rally that we've seen on Nvidia would be reflecting on your earnings. I just thought we should mark that because we talk about this so much.
Yeah.
And it'd be interesting to know whether any of local investors are making money out of this.
That's a great
point. And they are.
Yeah, that's a great point that you do have an opportunity. But yes, so the FII flows is the big factor. I suppose, Neeraj, the other big question is whether you're going to sustain, whether you're going to see some profit booking after the bump up yesterday. And in this conversation we had post the closing, one point that came out is that Nifty Sensex was in great shape. Relatively, the broader markets did not perform at the same pace.
Yeah.
So maybe people looking at their portfolio yesterday didn't feel the same cheer that they saw maybe on TV screens like ours.
Unless they had Adani Group or some of the PSU banks in their portfolios. But you know, I think well summarized really. Just the point is that somehow Indian markets currently, even yesterday, right? Indian markets did their own thing. It was not that the global markets were rara, but because of this RBI move, Indian markets managed to do their own thing completely, and the momentum is sustained. Now, Tamanna makes a very important point. Could there be some bit of profit booking? A lot of traders trade for the week. The week is coming to a close. You take your money, go home. A new Monday, new trades. So all of that may happen. But over a period of next 6 days, is the momentum still set for the upside? I would reckon yes, because frankly, yesterday was the first hint of 2 things happening simultaneously. Some serious short covering and some serious global buying happening in tandem. We haven't seen both of those happening together. As the number showed, 4,600 crores of buying from the FI side. FI short covering, we've spoken about how it's been continuous for the last 3 or 4 days. The long short ratio has improved from 18% on the 18th of May to probably about 22 or 23% currently. So first hint of both of these things happening in tandem. This doesn't end in a jiffy, I would reckon. And if today the bond markets, as they open up, show yields dropping dramatically, it might well give a further leg up to the PSU bank sentiment and maybe to banks at large. So that's to be watched out for. And therefore, I think infra stocks and PSU banks remain the top draw, along with select media stocks. You look at that space carefully, media by the way, viewers, and you see the delivery-based buying that is happening into some of those media names. You'll get a hint of what we're trying to say here. And by the way, speaking of delivery, just that point about yesterday, we saw some of these stocks gain so much. Look at, guys, the delivery-based buying that happened in some of these yesterday versus the 5-day averages. So Adani Enterprises and Adani Ports and L&T infra, right? 18 lakh shares marked for delivery for Adani Enterprises versus a 5-day average of 11.58. Adani Ports double the volumes, 27 lakh shares marked for delivery. This is combined BSE NSE versus 13.61. L&T 21.29 versus 12.45. This is serious delivery-based buying if you look at the ticket sizes of these stocks. HDFC Bank, look at that number. 1.21 crore shares versus 97 crore shares. Even for a BOB or an IndusInd, some serious delivery-based buying relative to averages. In SBI's case, there was not as much of an uptick, and maybe which is why SBI probably didn't do as well as some of the others. But there were some long calls that came in for SBI on closing trade yesterday. So that's to be kept in mind as well. And guys, it's an interesting day of results too. NTPC, Hindalco, Hindustan Copper, a clutch of those names.
So just to add to your list, banks have done exceptionally well yesterday. And so was Auto. Auto saw buying to the tune of 2.5% versus the Nifty. And also what stood out is, and this could be a shade of FIs coming back, right? Yesterday's trade belonged to Nifty 50. It was up 1.7%. Broader markets clearly underperformed the benchmark. My only point to FIs coming back is Monday is a holiday on Wall Street.
Yeah.
So will they come out and go aggressive today? It looks slightly unlikely to me, only because they are going into a long weekend as well. And historically, we've seen that FI traders avoid taking aggressive positions on either sides ahead of a long weekend. So you want to keep that in mind. But if they do come back, private banks, that's a space you want to watch out for, is going to be in focus. And the frontline names, that's actually where FIs like to find a piece of their pie in the frontline names as compared to what DIs prefer, which is the broader markets. But quickly going into earnings, and for a change, I've got 3 fantastic earnings to report on. Fortis Healthcare, very strong numbers coming in from there. Their revenue is up 8.7%. Now, what I also interestingly got told this morning is for a hospital company as well, you have seasonality. So Q3 is a weak quarter because of festivals. Q2 and Q4 turns out to be strong. We saw that for Metropolis, and now we're seeing it for Fortis as well. Fortis reported good set of earnings on top line, up nearly 8%. Net profit has been fantastic, coming at 203 crores versus 138 crores. Margins have also improved substantially to come in at 21.3 versus what we saw in the same quarter last year at 16.5%. In the management con call, they indicated that after the divestment of Malar, they would see margin uptake on EBITDA, and that's exactly how it's played out. Other expenses have also decreased for Fortis. So all that makes the company's reporting look actually pretty good. The counter could be one that you may see a gap up on, or you should rather see a gap up on in early trade this morning. Another standout was Interglobe Aviation, competing with the likes of international players. This one has actually reported a very strong set of earnings, especially given that it's come out of a loss exactly in the same quarter last year. Well, despite higher fuel prices, this one's reported good earnings. Revenues were up 26%. EBITDA was up 66%. Margins have also improved substantially at 23.3%, and net profit was up about 106% at 1,895 crores. Well, it's a significant turnaround from a loss which was over 300 crores in the previous fiscal year. This is also the 6th consecutive quarter driven by robust passenger demand despite rising fuel prices. Indigo owns or commands a market share of about 60% in the country. There's also talk about, in fact, they've talked about this, that they would be launching the business class segment, and that usually, I believe, is the rather profitable segment for an aviation company.
You know, I'm a bit mixed on the business class announcement, Samina, and there's an MS note this morning saying that that's the right way for them to go. But Indigo's complete positioning has been as an LCC, always as a low-cost carrier. Why are they now switching?
So, you know, if you look at
international long haul, how can you do without business class? But
no, but they're going to do it on select routes
as well. But
everywhere. Yeah. International long haul, okay, fine. But the fact is that you know, you're building on the premiumization trend, which you're seeing across sectors, in a space where your passengers booking tickets are notorious for cost saving.
That's true.
And your big numbers are coming domestically. In terms of your volumes growing, it is still domestically. Yeah, but they want to get into the long haul space. Yeah, I agree.
Which is why I think that might be a good strategy. But
then you're competing with, say, an Emirates or an Air India as well. I don't know. It's an interesting move. They have to move somewhere. But business class has been, or you know, catering to a premium domestic audience in aviation has been, I would say, a treacherous terrain for a lot of Indian airlines.
But having said that, I think with an aviation or an airline company, the most profitable segment is business class and premium economy. No, actually, first class is not as profitable from what I recently read. It's largely business and premium. Premium economy, of course, you pay a huge bump up for very little room that you're adding. So we'll wait and see. We'll try and get some more perspective on it.
The other thing about Indigo, though, is the loyalty program as well. For the longest time, so many people have said, why doesn't Indigo have a loyalty program? Now they finally have one. It might just spur a lot of people, chalo 1 ghanta delay hai, but mujhe points mil rahe hain, let me stick to Indigo.
Yeah, and I think the other thing that builds on Tamanna's point is they do have code sharing. So if that could be another reason why you'd want to do it. So if you're flying a route with, say, a Turkish Airlines, you will still land a flying economy because the option of business class is not available, right? On the code sharing, but that's a discussion we will
Indigo
talk to
is
an expert
positive,
about.
rather, Morgan Stanley is positive, LRI is negative. LRI says, hey, we have a downside 3,500 target price. So it's all over the place.
It's all over the place. But the earnings have been fantastic, and they
That is no doubt.
are sitting on a huge cash balance
Yeah.
of 34,000 crores, and I think that's eye-catching.
To consistently make money as an airline in India, which has been the graveyard of so many.
It's been compared to Emirates and Singapore Airlines. It said
Wow.
that its league is international players, not even Indian players. But very quickly, moving from there is Zagle Prepaid. Again, fantastic run on this company. They've been bagging orders back to back in the last 6 to 8 months. Profits, as expected, are high by 153%. Revenues are also up 47%. Now, the only thing that could cap the rally in Zagle Prepaid is a very, very expensive valuations that this stock commands. But apart from that, very solid earnings from Indigo, from Fortis and Zagle Prepaid.
All right, very quickly, the 3 stocks I'm talking about, Honasa is the first one. Their revenues at 21% up is slightly below what the street was expecting. Advertisement costs as percentage of revenue has steadily risen, but from what brokerages are saying this morning, there is a hope that margins will improve, and other expenses have also, of course, come down. The management is talking about double-digit growth for their key brand, which is Mama Earth. It's still, their biggest brand, and anticipates a revenue of 10 billion in 3 to 5 years for the Derma company, Dr. Shade 5 billion and Aqualogica 5 billion. So what does MK say? Management guidance of more than 20% revenue CAGR is reassuring, whereas its near-term margin builds will have to be seen. So that is one stock to watch. Honasa yesterday took a bit of a beating in a market which was otherwise quite buoyant. BKG Foods is the other one. Now this is I would say a yummy set of numbers. Now the snack market has anyway been in the focus, whether it's listed or unlisted, but BKG Foods has actually done well. Look at their net profit number, and that's the one that stands out, nearly 200% up at 116 crores versus 39 crores. EBITDA has gone up robustly at 161 versus 62 crores. Margin bump up is massive, 26.2% versus 13.4%. Revenues have also gone up 32%. What has worked for them is a dip in their cost of raw materials, and if the market is really in a mood to reward good numbers, BKG is definitely a beneficiary of that. Very quickly, Vodafone company has clarified that they are in discussions with Ericsson and other network vendors for 5G network gears. You might see a bit of a bump up. Vodafone was up 4% yesterday. So
for Vodafone, that's large.
no, it is.
50 paisa movement on the stock.
No, but for Vodafone, it is large because look what is being bet on. Again, coming back to what has happened yesterday, and I know we're going to talk about that in just a second. What is being bet on is that if you have policy continuity, then directionally you're going to see more of the same, and that works for Vodafone.
And we talked about this at the earnings, right? That they're already at rock bottom.
Yeah.
Where do you go from here? The only way to go is up, I guess, and that's what.
Yeah, it's showing. Okay, just before we go to Robert Sokin, quick 3 stocks from my end. JK Lakshmi Cement could be interesting. The revenues were down 4.4% at 781 versus estimated 1928, so that's a pickle. But margins at 18.9 versus 14.7, very strong performance there for a cement company to do that this quarter has been tough. So JK Lakshmi is in focus. PAT up 41% at 162 versus 143, so that stock could do well. I'll watch out for Bayer Crop Science on the negative side. Revenues were down 20%. Lower than estimate, margins at 12.2, lower than estimate, PAT down 39% at 96 crores, lower than estimate, could react negatively. And the flip side, something which has more certainty is Johnson Controls. Revenues up 40%. After a very weak Q3, Q4, very strong for Johnson Controls. Revenues up 40% at 772 ahead of estimates. Margins at 10.6% ahead of estimates. PAT at 49 crores versus a loss of 1 crores, way above estimates, could react positively. But there are more stocks, of course, and we'll talk about them during the course of the day. But let's get in Robert Sokin, senior global economist at Citi Research, who joins in right now with his thoughts around the global markets, maybe a view on India as well. Robert, great having you. Thanks for taking the time out. Good seeing you on NDTV Profit again. While India is doing its own thing, just a small question around whether this data from the US, which has been mixed, but leading people to believe that overall, there could be a probability of a rate cut even if it's delayed. Does it augur well for emerging markets, or do you differ on that opinion?
right now, what we're seeing is a very difficult backdrop for U.S. data. Q1 data, broadly speaking, surprised to the upside on activity, also surprised to the upside on inflation. In Q2, it's been more mixed. For much of Q2, we were getting downside surprises, softer data than expected. And then today, we had with the PMIs, much stronger than expected on both the services and the manufacturing side. And you're hearing at the same time more hawkish language from the Fed about potentially staying higher for longer, potentially needing to see more progress on the inflation front. So putting all that together, I think markets know that a rate cut is still coming, but is pushing out the expectations of that rate cut. And we saw that today where expectations really got pushed basically for a cut at the end of the year. I think for emerging markets, it's very challenging. On the data side, India, other emerging markets have been holding up very well on the data front. We have very constructive forecasts for emerging markets. We think they're going to grow on average at a similar pace to last year. But this higher for longer Fed creates a lot of challenges. And I think you saw that already today in some of the movements in some of the EM currencies. And it also challenges the ability for emerging market central banks to cut rates. So broadly speaking, I think EMs are in a good spot, but this higher for longer Fed can create some complications.
Robert, good morning. Tamanna here, and great to speak with you. I just want to take that point further where you talked about emerging markets and bring it specifically to India. Now, from the Indian perspective, we've seen largely FIIs selling through the month of May. Yesterday was an exception where you had the second day in May that you had FIIs actually coming in. What is the view emerging on India, and is there, in a sense, a wait and watch for June 4th? As a deadline, after which India becomes interesting once again? How do you view that picture?
I think for India, the economy is in a very good place. As I mentioned, we have it recording solid growth again this year, slowing down from last year's extremely rapid pace, but still growing somewhere in the mid 6% range. So still a very solid performance. And when you look across the data for India, you're seeing strength on all fronts. If you look at the purchasing manager indexes, for example, India is performing very well on both the services side and the manufacturing side. And broadly speaking, activity indicators have been holding up quite well. And inflation has been holding at fairly decent levels and continuing to moderate. So I think in terms of the story of India, very positive on the growth front. We do think that in terms of rate cuts out of India, that you're going to have a patient central bank and probably not going to start getting easing until later this year. So maybe that is when the story on India changes a little bit, when you start to see movements in the policy rate. Of course, as you said, also the election is front and center. So that could be another big risk event when we get the outcome of those policies. But I think India, as I said, is a very positive story, and I think is going to continue to stay a very positive story, not for just this year, but beyond this year as well.
Robert, hi, it's Samina as well joining in. And I want to talk to you about the India-China comparison. Both markets are at two ends of popularity in that sense, with India, of course, attracting a lot of affection, while China has been drawing a little bit of a cold shoulder despite its attempt to try to pull back. Of course, Goldman and Morgan Stanley list India as their top bet for the decade ahead. How do you feel? Do you think India is in a sweeter spot than China?
I think it's a very important comparison. And as you said, India, a lot of press for a lot of positive developments, not just in this year, as I mentioned, but beyond this year. One example to point to in an India versus China comparison is India has very favorable demographics relative to other large economies over the next, let's say, decade, compared to China, where demographics have been turning against them in terms of being supportive for growth, and that is likely to continue. But there are other important comparisons as well. I think China for this year, we're fairly comfortable that there's enough momentum in the economy to end up with growth somewhere around 5%. But beyond that, there are a number of enormous longer-term challenges, chronic tensions between the U.S. and China, which are likely to be in place regardless of who is elected in the U.S. Later this year. There are issues with youth unemployment, issues, adjustments in the property sector. There's a long list of concerns that we have over China's growth over the medium to long run. So I think both economies, given their size, generally just have challenges they'll both have to overcome. But I do think the list for China is much longer. And I think India in particular is in a good place to benefit from its own dynamics, but also benefiting from some of the movement away in global supply chains from China that's shifting to other locales. Emerging markets like Mexico are benefiting from that. And I think India is probably one of the big beneficiaries as well in coming years.
Robert, very quickly, when you look at India for the next 1 year, would you buy Indian debt or Indian equity?
I think it's a great question. And I think there's a case that both can be attractive, and in terms of the growth dynamics I mentioned, I think are very favorable. And I think that can support the equity market. I know some have pointed out that equities have obviously appreciated a lot in recent years, but I still think, given the dynamics that we've been discussing, that can still be attractive. And I do think there's also strong fundamental reasons to look at the debt side as well. So I think, again, in terms of just Indian assets, I think broadly could be attractive in this environment.
Robert, just to talk about what looks good in Indian equity, and for foreign investors, banks, IT has been exciting, private banks especially. But they have seen an environment where your government-owned companies, mid-caps, and other sectors are doing better. Do you think that there is a case to review the Indian equity spend, and how would you look at it right now?
I think, as you said, it's a challenge given some of those factors that you mentioned. Now, given some of the dynamics that I highlighted, I think there is some scope for some very positive stories to be in play. In particular, the government has put in place policies to make India an attractive hub for all sorts of manufacturing. And I think there's a good chance that those can bear fruit going forward, given this shift away that we are seeing globally in global supply chains away from China and to other locations. So I think in the manufacturing spaces, there's a very positive long-run story potentially there. But broadly speaking, as I mentioned, I think as the economy continues to expand, and if it continues to grow at this robust pace or a robust pace, I think there's going to be a lot of opportunities in various sectors as those economies expand. Especially also right now, we're in a challenging environment for global trade. We've had a global manufacturing slowdown for much of the last year and a half. As that cycle starts to turn, that is also going to help a variety of export businesses, particularly within manufacturing in India. So I think there's a lot of opportunities, but particularly focused on this movement away from China story and into other areas of manufacturing that India can benefit from.
Robert, one last question from my end. I don't know if you got a chance to see that, but the Reserve Bank of India, there's the Central Bank of India, gave a very large dividend to the government. Our bond markets were shut yesterday, so the yields may actually react today. But it gives a lot of comfort to anybody who's watching the Indian macro on the fiscal glide path the government has laid out in the budget gone by. And of course, some more ammo for spending. Did you have a chance to look at that act done? And what is your view, therefore, on Indian yields or Indian bonds, considering that there's also the inclusion of the Indian bonds on the JP Morgan bond index coming up in a month's time?
Yeah. Exactly. And you're hitting on a lot of the key fundamentals I was alluding to earlier that could make bonds also an attractive option. I know we've talked before about India's inclusion, as you mentioned, into that index, very important development. And I think, as you highlighted, by the dividend, but just more broadly, is that India's fiscal position has been improving. So you are seeing a consolidation in the deficit, and at the same time, the economy is continuing to hold up very well. So I take that as a very positive story that the government is able to improve its fiscal position and the economy is able to weather that headwind and continue to record strong growth. So for all of those reasons, as you noted, I think they highlight, again, the underlying strength of the Indian economy, and then also some of that attractiveness, as you said, on the government bond side.
Robert, very lastly, while you sound very positive, and I guess a lot of investors do as well, why is India then seeing FI flows time and again? I mean, one thing for a fact is that in the last 12 months, FIs haven't been flocking to India with the same ferocity, to say the least. What do you think explains that? Is it to do with dollar hedging? Is it to do with valuations? What is it?
Yeah, and as you noted, I think that the broader story for India is very positive, but we are seeing a challenging environment for global flows, as I mentioned, in particular because of, I think, this higher for longer Fed is likely playing a role, and I think money moving into other spaces just beyond that dollar. We've also seen large movements in commodities, for example. So I think there are other areas where you're seeing large flows at the moment, and that maybe can help explain some of the dynamics that you mentioned. But longer term, as I said, I think it's going to be a very attractive destination for capital. And I think that's more the path to focus on, is the broader long-term dynamics. But I think some of these huge market dynamics that we discussed earlier are probably, at least in part, in play of that slowdown that you mentioned.
All right, thank you so much, Robert. Great speaking with you this morning. Fantastic voice to have to just make sense of what is happening globally and how the India story is emerging as well. So great to speak with you. So Robert Sorkin there, but just as we're speaking about the global view on India, this Chris Wood Greed and Fear note this morning was very interesting, and Neeraj, when you shared it this morning and I was looking at it, I just picked out a couple of things that stood out for me. So the one part is where he talks about the two risk factors or the two key things from the India perspective. First is when he talks about the elections, and he says Modi has made more positive difference to ordinary people's lives in 10 years. He has been in power than any other leader or government in the world today. That's a big thumbs up coming up from a Chris Wood. And I know we are in a very politically polarized world where things get muddied, but I mean, one could argue that this is a guy who doesn't care about what happens in Indian politics domestically. He's saying it how he sees it. So I would just put that out there. He says this is why a repeat of the shock BJP defeat in 2004 remains unlikely in the extreme. So, even as we are in poll season talking about possible outcomes, this is a huge one, I thought.
Yeah.
He says still it's entirely possible, if not probable, that the ruling party does not do well as the BJP was hoping. Even if the BJP wins by only, double quotes, the number of seats in the last general elections, it's quite enough to run the government. The other important thing for the market to see. The second risk I thought was the more interesting one, which is what domestic mutual funds are speaking about as per Chris Wood, is an increase in capital gains tax or an increase in the tenure required to be eligible for it. And now this is the part that makes sense. I'm going to skip to plate 4, where he says that the reason that such proposals are apparently under consideration is growing evidence of retail speculation, most particularly in the options market, where India has options for individual stocks. Such paper speculation is unlikely to be viewed as healthy by Modi or indeed the BJP. For me, this was the one definitive line talking about what is concerning the market. We're looking at it as poll concern. I think the market is looking to what is coming next.
I think one more is the private banks.
Yeah, no,
the
sorry.
Very clear mention on
but just
private
the point
banks.
on this, options trades anyways attract business income gains, right? Because that's proper, it's
trading.
Not short-term
It's
trading
not
as well.
long-term.
Yeah, it's not even short-term trading, it's business income. So you anyways give 30% tax on that. Now, will an increase in long-term capital gains tax from 10% to 15% impact that? No, it won't. So let's see if there is capital gains tax tinkering done in a way that it dissuades the option markets in that fashion. Interesting to see. But just to the other point, every year before the budget, this is the risk. If they don't do it this year, I can lay all my money on the line. The next year, this will be flagged off as the big risk that will be tinkering with the capital.
And will it happen? Are you putting money on it happening eventually?
Just looking at, no, right now, just looking at what Prime Minister Modi has said about the strength of the capital markets being important, etc., very large increases to dissuade the long-term investor seem very unlikely. For the option side,
in fact, for all you know, they might, I'm just looking at this the other way actually, is to reduce the time horizon of long term. Would that change it?
No, increase even.
No, decrease it, because what are you competing with? You're competing with daily traders. You're competing with option trading, which is anyway short term in nature.
Yeah, but so therefore you increase, hang on for the long term, so you give the benefit
for
3 years instead of 1 year.
A guy who's coming in for one series is not going to think, I mean, you're adding 11 months additional, right, on your long term.
But for the long term side, you're anyways at 1 year.
So I think the other thing that he talked about was private banks. I think that's another space that may see attention by FIIs. HDFC is what he also mentioned about. And talking about what comes up before the budget, it's not just taxing, it's also inheritance tax. That's the other big one that shows up every year pre-budget.
But they have said, he's gone on record in public speeches, Prime Minister Modi, saying that we're not going to do it because it was in the Congress manifesto, and he's saying we will not do it.
But having said that, the big families in the country have set up family offices outside, and that, of course, usually tinkers with what people usually think. But we'll take a break. We'll come back. Implied Nifty is indicating to a flat start, but lots of action on the F&O side, so stay tuned. We'll be right back.
Some people say, hey, you know.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
Okay, back with India Market Open. A minute left for the markets to start. Amongst the stocks to focus on, if we haven't already, is Interglobe Aviation. Keep an eye out for that one. And Chakri, would love to come to you to understand what did you make of the results and this whole strategy that they are doing, loyalty programs, business class, international long haul. Does that aid the sentiment around Interglobe?
You know, Interglobe is probably the only one airline left in India right now in terms of both market share as well as operating efficiency. And, you know, given that they were or still are a low-cost airline and they want to expand into new segments, that's a whole different ballgame of running an airline, which is a full-service airline around the globe. And so that calls for a different management skill set. So, you know, when they're doing that clearly, and there are a set of risks involved, given the standard risks of high oil price volatility. The stock has done very, very well. But given that there is no competition for Interglobe at the current levels, I mean, in the current marketplace, then it is worth the trade.
Right, that's what it looks like, and that's not how it's going to be. That's what we think. early ticks coming in on pre-open trade. We'll give it a couple of minutes before we go back and do a check. But a few stocks you want to see in early trade is going to be the Adani Group companies after that stellar performance yesterday. It wouldn't surprise me if the counter sees a little bit of consolidation after yesterday's rally. In terms of earnings reaction, stocks like Indigo, Fortis will be reacting to their numbers. Adani is still trading flat, 3,400 on the counter. Still a positive bias, rather, is what we see. But we'll come back to that in a minute. Kush, you know, IT has been lagging slightly behind. I wouldn't say that it's by a margin, but some of those IT counters, would you bet on right now? Anything from the pack that you like here?
So I mean, I don't think IT as a pack is out of the woods. I wouldn't call it that, but you know, I'm taking heart from the fact that a lot of these names over the last month and a half have made a strong base. You look at the likes of Persistent, you look at the likes of Coforge, of course, and that's already done its thing. But you know, even at TCS and Infosys and the big names, they've at least formed a base. So it gives me comfort that if I have to buy, at least I know my you know, margin of risk in some of these names. Now, would I go out and bet big money on it? Not really. I would actually look at something like a Persistent and perhaps a TCS, just the two, from this space to start accumulating from, let's say, a 6 to 12 month perspective. But is it out of the woods? I'm not entirely sure.
Very quick one. Any trades on railway stocks? We've already seen what's happened with RVNL, but I'm moving away from defense and talking about rail stocks because those as well are eye-catching.
You might as well speak about them in the same breath. They've been doing the exact same thing, and just as we were discussing a while ago that who's to say where the top is really, right? Some of these names, they've run up quite a bit, but then they continue to do so. So I think an IRFC is something that I have on my radar. Texrail is something that's the other stock that I've got on my radar. If I were to bet between the two of them, Texrail would be my pick.
Two stocks I want to talk about this morning, at least in pre-open session. Pull up Interglobe Aviation, pull up BKG Foods. Both are between 9 and, at least on BSE, 9 and 10%. Interglobe on the NSE rates about 3%. Let's see BKG Foods at a 10% top. That also because of the stellar numbers that we talked about this morning. Chakri, in that snack market, in that food market, any views on a BKG?
That market still continues to be a volume game and not a pricing power game. And so in that thing, again, it goes back to the same story, which is there are a few players worth the trade. But other than that, and they're good acquisition plays by the larger players, but they're good positional trades.
Okay. Kush, view on Interglobe and BKG?
Well, Interglobe, stellar run, but I think it's now due for a correction. We're seeing what I call the negative RSI divergence on this one. So you'll see the price hitting some sort of resistance around this 4,400 mark. Any dip towards 4,200, 4,250 would be a good entry point. So I will buy Indigo for sure, but on a dip. BKG, I will take this opportunity to exit. It's opening at that 590, 600 resistance band. So I'll take that opportunity to exit.
You talked about rail stocks, and I realized you mentioned IRFC and Textrail. One that's lagging slightly behind could probably be IRCTC. Again, 6 months, 60% returns, no one's talking about that, but I feel like that could be one more that may see a little bit of a upside or maybe not. I'm just trying to find pockets of trade where investors and traders can look at, right?
Aren't we all, right? Most of these are already seem like taken, right?
Yeah,
overcurrent
it's too late
trades already.
to the party.
Correct. No, see, IRFC we've been constructive on, I think
IRCTC.
around... I'm sorry, IRCTC we've been constructive on. Around 1,050, we initiated a call. Targets met. The only problem with this one is that, it doesn't have that kind of momentum as you find with the other cash names, right? But that's okay because this is an FNO stock. You would perhaps take a leveraged position and be happy with, a 2 to 5% kind of an up move gradually. So IRCTC on the whole very constructive. If you don't have it in your trading position also, not a bad time. You could add 1080 should act as your stop loss.
Okay, some other stocks that could be reacting, and we'll wait for the pre-open rates to settle, but Fortis could have a bit of a leg up. Orchid and Bayer could have a bit of a pull back. Johnson Controls is the other one which could actually do well because after a fairly shabby quarter gone by, 20%. Well, these rates will settle. Maybe it'll still be up 20%, but Johnson Controls after a very weak quarter 3 has turned out with a remarkable quarter 4. In some sense, Chakri Lokpriya, it's also turning out to be a quarter for MNC stocks, right? From an ABB to a Siemens to a Honeywell to SKF to Johnson Controls now, the margin performance from most of these is exceptional. I don't know if you look at Johnson Controls, but if you do, great. If you don't, any of the MNC names that you like, even at these valuations?
The MNC names at these valuations, Johnson Controls still probably yes, but more comfortable with the companies you mentioned like SKF, NRB Bearings, Timken. These companies benefit not just from automotive, but industrial, defense, railways. All companies need bearings. And, with the kind of activity that's happening in each of these sectors, and the revenue growth, margin improvement that you've seen from each of these companies, I think that business momentum will continue for these stocks easily for the next 3-4 years to come. So I think they're still looking good to buy.
Right, that's the word coming in on some of those stocks that still look attractive at this stage. Well, the big story continues to be the RBI's bonanza dividend to the government, which of course gave that boost that bulls were looking for on D-Street. But remember, yesterday was a bank holiday, and the real reaction of that would be felt on the fixed income market today. Devang Shah, head of fixed income Axis Mutual Fund, now joins in. Devang, what are you expecting in terms of yields? We dipped briefly below 7% on Wednesday. As we go into trade this morning, where are the bets, and also good time to get into duration, you think?
Yeah, so I think you rightly pointed out, we expect the bond markets to actually continue to outperform. The long bonds should rally. The amount is actually significantly larger than all of us anticipated, and probably it's higher by more than 1 trillion. I think at the best case scenario, all were expecting a 1 trillion kind of RBI dividend. It's come to 2.1 trillion. So it's significantly higher. This can open up space if we get the current government back, and if there can be actually a part of fiscal consolidation. Our perspective is we are expecting a 0.2 to 0.3 fiscal consolidation, which can actually lead to at least 60 to 75,000 crores of borrowing cut. If the borrowing cut comes, we genuinely expect yields to trend towards 675. Today, I think markets had reacted a bit to the news on Wednesday, as you rightly pointed out, and they actually traded a tad below 7%. Our expectation is into the run-up, and if we get the election results out next week, bond markets can trade towards 690. With the borrowing cut, we expect the bond markets to go towards 675, and it's a good thing for fiscal consolidation.
What are the timelines, Devang? Right? Because a lot of people are now trying to pencil in that in preempting the bond inclusion in the JP Morgan indices plus this RBI bonanza mean that the drop in yields could happen much quicker. What are the timelines you are working with?
Yeah, so our perspective is, as you rightly pointed out, Neeraj, I think the thought process always in bond markets have been that they front run the entire rate cuts. And we have seen that time and again. Our expectation is today the demand supply dynamics for bond markets has been the driver for yields to rally, and they should continue. If you ask me a time frame, my understanding is if the borrowing cut comes, and if we get the current government and we get the borrowing cut, we should see the 10 to 20 basis of rally in the next 1 to 2 months. So the perspective would be very near term. The only risk which we all need to keep in mind is that the government has actually built on a large surplus because they have not been spending due to election. It's seasonal, and they will start spending once the election phase gets over. But government is actually sitting on good surplus today. With this transfer, the government surplus can actually go above 5 trillion. Once that spending comes and JP Morgan flows hit the market next month, if RBI does some tweaking through MSS stabilization schemes, I think there can be a break to the rallies. The only risk, if you ask me, for the downward trend in bond markets is if RBI uses market stabilization scheme to absorb the flows in the near term, that can put a somewhat of break. Otherwise, we expect the yields to rally by 50 to 20 basis in the next 2 months.
Devang, fair point. And of course, if we get a rate cut from the Fed anytime over the next couple of months, it's only going to aid that rally on the 10-year. From what I understand, short-term liquidity still remains tight. A and B, also, what's the word on corporate bonds? I know that they've not caught attention of investors, but of course, with JP Morgan's inclusion, that might also become a good space for investors, you think?
So completely agree. I think, see, JP Morgan index, if you look at the constituents of the index and the weightages, they are significantly everything into government bonds. So yes, the first leg of rally would come probably in government bonds, but there will definitely be a catch-up rally in corporate bonds also. Corporate bond supply has also been muted. And our perspective, if you ask me, is the 3 to 5 year segment, which is still trading at around 770 levels, is a very, very good point for investors to look at. So from a corporate bond market perspective also, with liquidity easing massively, limited supply, and the overall macro environment good for rates, our anticipation is that corporate bond markets will also catch up in the rally. We like the 3 to 5 year corporate bond segment at this point of time.
Okay. Devang, really appreciate you taking time out and giving us this lowdown. Very important points, and thanks for the cautionary note around what the RBI could do as well, and the resultant impact on yields. We really appreciate your time today. Well, that's the view from Devang Mehta of Axis, and keep an eye out for some of the yields and some of the stocks out there as well. As the pre-open rates have settled, we don't have a dip in Adani Ent. We have a marginal flattening out of Adani Ports, if you will, but a lot of individual stocks otherwise doing okay. Kush, pre-open rates have settled. What stands out for you now atop your list? Because when I look at the Nifty 500, for example, as is always the case, a clutch of stocks flying around, both on the upside and the downside. I mean, there's a Schneider which is correcting, or a Godrej Properties correcting, whereas a Bikaji is gaining.
Well, a couple of names, but I think I'll stick to auto ancillaries in this case. A Lumax Auto or Lumax Auto Tech is doing well. I think from a near-term perspective, 515, 525 should be your targets if you go long on this one, and that's a must-have in your portfolio. 475 is where I would place my stop loss. So a good opening above the resistance bands. So I think 515, 525, the next levels to watch for on Lumax Auto.
Vodafone, 4% up move yesterday, 1425 in pre-open. Does it look like a long trade here? And slew of brokerage upgrades.
Well, once bitten, twice shy. The stocks, this is an overcrowded trade. This is an extremely overcrowded trade. So it'll be very difficult for, the retail traders at least to make money on this. Perhaps if you have some of it in your portfolio, then you could wait for a level of 16. But other than that, I would just wait and watch on this one. Time and again, we've got news that comes in, then fizzles out.
Chakri, in terms of, what would be your top calls this morning and which space would you look at? Now, this is a time when our viewers would be wondering, what do you do? You've already had quite a run-up in the market. Any of your top picks today?
I'd still look at those companies, which is those SKF, Timken, NRB bearings, because, they benefit from all the reasons we discussed in terms of, auto industries, railways, defense, industrial. And outside of that, power financiers, whichever power financiers will continue to be in focus for the next foreseeable future. PFC, REC. I think so. Those are the trades that I would stick to.
Right. A couple of stocks that will continue to remain in focus is going to be defense, railway, banks as well. Kush, I don't know whether you've talked about banks, but in the PSU pack, anything that you'd consider a long trade on?
From the banking space?
From public sector banks specifically.
So there's one name that we've not discussed, and we like that, which is Union Bank. It's broken above some of the key, averages, 148 being one of the key resistance zones. So I think Union Bank, from the cash stock perspective, you should have in your portfolio. 156, 159 are the levels to look for. Support zone comes in at 148.
And Honasa, have you seen that one? The stock is expected to see a gap up post its earnings. Looks like a trade there too. 445 is what it was last traded at. So yeah.
Exit,
huh? Yeah. So Honasa is a sell. 6% uptick in pre-open trade is what's expected. But one last call before we go into market open.
I'll stick to Lumax Auto Tech. The stocks are doing well. We've seen a good uptick in terms of volume as well. So 515, 525, the levels we discussed, should act as a target.
Well, Lumax Auto, watch out for this as well. Interestingly, the Nifty, just mark the pre-open rates on the Nifty if we can before we continue with these counters, because we were very close to 23K on close yesterday. If we can just get the Nifty pre-open rates here for a moment before we get back the counter, because we are very close to the 23,000. We are currently at 22,930. So just about a small dip. Will this dip get bought into? Well, Kushbura certainly believes it will. Let's wait and watch if it does. But Chakri, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time this morning. And keep in mind that while the markets may start off flat,
some eyes might also be on the PSU banks and whether they continue the momentum, because bond yields haven't quite reacted the way a few people might have anticipated. But here are the first trades. Indian markets in line with the Asian markets are soft, not as soft. That's the key thing, about 0.19%. Banks should come up on your screen and mid caps and small caps then. Bank Nifty 2 lying flat. What about the broader markets? They actually underperformed the large caps yesterday in today's session, starting off absolutely flat, almost in line with what the large caps are doing. So a bit of a nothing kind of a morning. Let's see if we build on from this. Let's get the heat map up on the screen, the large caps, and see what's moving and what's not. A lot of red, very little green. Let's start off with the green first. Ahead of numbers, Hindalco is up about 0.5%. Ahead of numbers, NTPC is up about 0.5%. Axis Bank is waiting between 0.5% to 1% kind of gains. There's strength in Divi's, ONGC, but nothing really worth talking about. Maybe a Hindalco, which had corrected yesterday because commodities per se have cooled off a little bit. What's not doing well? Yesterday's key gainer, Adani Ports, is down about a couple of percentage points. Coal India down about 1%. M&M down about 1%. So a fair degree of red. This may change, by the way, but for now, the standout mover, Mahindra and Mahindra and Adani Ports on the downside. Maybe a Hindalco on the upside. Not as much movement in large caps, about 0.25% lower.
What we saw yesterday at opening as well, Neeraj, and viewers, if you look at what kind of an opening you had yesterday, it was quite similar. I would say a flattish kind of a start, and then you had that pickup around noon or so. Now, what's happening in the broader indices? Similar, flat to negative kind of an outlook on the small cap as well, just pretty much flat. But there are pockets of action that you can see this morning, and as we've been seeing over the last several sessions, it's usually result oriented. So let me start with BKG Foods. BKG Foods has had a stellar quarter, and in part because of inventory levels going down, raw material costs going down, 6% up on it. Honasa Consumer, another stock which has had another company which has a good quarter. We asked Kush on both of this, and his call was sell, but we'll ask him again if he retains that. Interglobe Aviation is the other one that I wanted to talk about. It's going to start a business class plan, and more details in August, but 2.5% up on what is a profitable airline in the Indian context. That's quite a rarity. V is one that I wanted to mention. Vodafone Idea, there's a UBS note which is upgraded with a target price of 18 rupees. That's about 3.5% up. BDL is a stock that we've been tracking very closely. Bharat Dynamics continues to have a great run today, about 12.5% up. And then Johnson Control is the other one that I would mention. Neeraj spoke about this on the trade setup as well. Earnings impact has been positive, about 17% up on Johnson Control. So you're seeing largely reactions to numbers right now, and on the broader market sense, maybe a bit of a pause in terms of any big moves. Samina, what are you spotting that's interesting?
They can't not spot BDL again this morning, right? I mean, there's a pause everywhere else. This one went through a stock split, which takes effect today. That's the broader market picture, marginal outperformance, but nothing to write home about and nothing at the same time to worry about. We've seen a record high yesterday. It's only expected to see consolidation this morning. And of course, we've also got a handover that's fairly weak from world markets. 13% on Bharat Dynamics. I mean, this rally has been phenomenal. It's up 60% in the last 5-6 odd days of trade. This morning seeing a 12% up move once again. So 1:2 is what the stock split has been, and the gains very reflective in early trade this morning. Well, becomes, I guess, a lot more attractive to retail investors who have a smaller kitty of money in that sense. Few other names that are worth a mention is BKG Foods. Good in earnings, stock is up 6%. Honasa also, the market is looking good with a 6% uptick in trade. JK Lakshmi, worth noting that counter 2 is seeing a movement. Vodafone Idea seeing not a marginal uptick, 3.5% higher this morning on a slew of brokerage upgrades that have come in on the stock. Garden Reach was your big gainer yesterday. Let's take a check if it's actually seeing some profit taking after. No stopping this one either. 18% yesterday, another 3% being added today. Be mindful, Coach and Shipyard will report numbers as well, and this one's not too far behind in the race to be the top gain in terms of shipbuilding companies. 5% higher on Coach and Shipyard. Numbers come out today, which are expected to beat street expectations. Ahead of that, you are seeing a sharp up move in Cochin Shipyard as well. Mascot Docks, while we're at it, let's do a quick check how this one's doing. 1.5% higher, not bad there either. Rail stocks, that's usually been the theme over the last couple of weeks of trade. IRFC, RVNL, which was a star trade last week. IRFC is up 1%, was Cush's buy call on IRFC. IRCTC and Texrail, a few other ones that you want to take a check on. Those counters also may see a little bit of an up move. Marginally high in Texmaco is what we have, and IRCTC trading flat. This one is not being able to participate in the move that some of the other rail companies are seeing. A whole bunch of earnings. I'll quickly take you through a few reactions to that. JK Lakshmi numbers were solid. The stock moves up. You've got Barbecue Nation that's also looking good in trade this morning. Rather, that reported 5.5% on JK Lakshmi. You've got Barbecue Nation that's trading flat. Purvankara reported a loss versus a profit. You've also got Sandhar Technologies, Bikaji Food that I talked about, ICRA. So Purvankara is down 5%. ICRA reported numbers. Zagle Prepaid that I highlighted this morning. Very strong earnings from Zagle Prepaid, 11% on ICRA. Zagle up 5% is what we have. Bayer Crop Science, Fortis Healthcare, Asian Granito, Orchid Pharma, Time Technoplast are some of the earnings reaction you're seeing on your screen. Manglo Chemicals and Fertilizers and Landmark Cars. So these are a whole bunch of mid to smaller companies that have reported numbers, and some of them seeing sharp reactions on all sides.
Yeah, just one more is Biocon out of the FNO ban today, and has really shot up in trade. But let's get in a special guest, Ashwini Agarwal, founder of Demeter Advisors, with us on the show. Ashwini, great having you, and thanks for agreeing to talk on such a short notice. But we were preempting 23,000 this morning. Hasn't quite happened. Will probably happen maybe through the course of the day or next week. Are you constructive, Ashwini, on the markets currently?
Morning, Neeraj. Thank you for having me here.
Pleasure is ours.
Being constructive on markets in the long term, I think that's the statement I'd like to make. In the short run, it's very difficult to predict because we've got some very big events ahead of us. And also, I'd like to say that, notwithstanding the election results and what they do to the markets, our markets are also being driven by what's happening around the world. And globally, markets, several markets are touching their all-time highs, and therefore India is following suit. But, as we have seen in 2007 and prior to that in 1999-2000, global events will determine the course for the Indian market as well. And I think in several pockets, valuations are very, very expensive, very stretched, and optimism is running very high. So while I'm constructive in the long run or in the medium term, I would say that there are pockets of exuberance in the market which investors should be a little wary of, where you're bound to see either losses or no money being made on a 3-year or a 5-year basis. I mean, one can't say what happened in the short run.
Ashwini, a lot of talk around the RBI bonanza yesterday and what that did to markets. Now, do you think that impact has digested in a day, or can it continue, especially for banks, but markets at large? It's a large bonanza.
No, it is. So I think fiscal discipline being set right, and the impact that it had on interest rates yesterday, especially on the long bond side, was accepted well by the market. And let's see what happens going ahead. I think the trajectory for interest rates looks to be stable for at least 3 to 6 months, and then hopefully down. But again, looking through the comments of the MPC committee members for the latest committee, I think the consensus is building around a rate cut. And I think what's holding us back is that global rates are not looking to fall anytime soon. Inflation is also kind of well-behaved, more or less. So I think the RBI might hold off for another 3 months or so. But interest rates direction is what the market priced in yesterday. And I think, that's got done. When the new government comes in, the fiscal budget they present and the fiscal trajectory they present would be very key to outlook for the medium term for interest rates. And that's something that I look forward to assessing as we go ahead.
Ashwini, good morning. Tamanna here. I'm wondering what is the real strategic thought of what happens June 4th. We've been so fixated on an election outcome, possible policy continuity. I think perhaps people are at the risk of losing sight of the bigger picture. What really changes in terms of expectations of what a new government do and how it translates into stock choices? You have that same basket, right, that you keep looking at: infra, rail, defense, etc. What else is there, and how much more can that further rise?
Good morning, Tamanna. Thanks for that question. Let's go back to what happened in 2008 and 2000, because the best that we can do is study history and take lessons from it. And in both those instances, when the market meltdown happened, the triggers can be what they were. That doesn't matter. Where you survived was that if you held reasonably valued stocks at the top of the cycle and you stayed away from the bubble stocks. Now, coming to your question on what happens post June 4th, the base case the market is pricing in is that the BJP comes back. Fewer seats or slightly more seats compared to the 303 that they had in the last Lok Sabha elections is a moot point, but nobody is expecting that BJP will not lead the next government. Now, if that were not to happen which is not the consensus view right now, if by any chance that were not to happen, then I think there will be some question marks as to who forms the government, what their policy imperatives will be, and that might create a little bit of ruffling of the feathers among investors, and you might see some of the expensive stocks sell off. Will that happen? The probability appears very low, and the market's obviously not saying so. So I think also I would like to add that sector-specific policy might be different if it is a non-BJP government, especially relating to defense or probably railways, and they may allocate resources away to other areas of their focus. But I think broader policy direction, if you see since 1991, when Manmohan Singh, finance minister, started the process of opening India's economy, has been more or less consistent. I mean, yes, there have been some emphasis in one area versus another area, but broadly nothing has changed. Even if you look at the current government, it has more or less carried on where the previous governments left off. And I think that process will continue. So I think, as a medium-term investor, what I try and do is look past the immediate events and see what I own. Does it offer me value from a medium-term perspective? And do I think that I make a reasonable rate of return on what I own over the medium term? And I think that's the only way to invest. At least that's my view.
That's a fair point, Ashwini. So directionally then, what should investors and long-term investors look for, and investors especially who are riding on the India story, right? Do banks make a comeback, especially private banks? Interesting, note from Chris Wood this morning on that point, that they've underperformed. Infra plays. Any views on the Adani Group stocks? I'm also asking you that because, they have been the big performer in the last couple of sessions.
So on banks, I'm also reasonably constructive because finance stocks, NBFCs and banks have kind of not done as well as the rest of the market, and valuations are still reasonable in that area. We are seeing no signs of any stress in the credit environment at this point in time. Margins are reasonably stable, so earnings growth is going to be reasonably strong. And at the PSU end of the spectrum, you'll continue to probably see lower than normalized credit costs because of the recoveries that are going through the system. So I think banks across the board will do well, and private sector banks will also do well. And I dare say that some of the NBFCs will also do well because of the valuation support that they enjoy and the earnings environment that they are experiencing. I also think that pharmaceuticals, chemicals, especially upstream chemicals, where inventory drama that unfolded over 22-23 and first half of fiscal 24 is now behind us. Earnings are starting to normalize. That looks very good. The pricing on generic drugs in the US is reasonably constructive. So I think, those two spaces also look reasonably interesting to me. I would also add that a few consumer names, and you have to be very careful bottom up here because valuations in the consumer space are still quite challenging, but there are opportunities out there also look interesting. And those would be the kind of three areas that I would like to pick at. And, I mean, infra, I think business is there, but I think valuations are challenging. So, in a lot of places. So, I don't really have that many ideas in the infra space right now. And I'm staying out of defense and rail for the time being because as a value investor, the euphoria scares me. They may continue to do well and continue to make a lot of money. I don't know, but I'd rather stay out of the party.
Okay. Kush, here's the question. We now starting to move back a little bit into the green. Is 23,000 on the cards in the next 1 hour?
Oh, before you leave the studio.
I was telling Neeraj that I will not leave the studio till we hit 23,000. I hope that doesn't take my weekend away. But I can always feel that, childlike enthusiasm for this milestone, which I rarely do, perhaps the studio effect. The answer is yes, there is a very stark possibility, and my confidence comes from the fact that the bank Nifty did not even slip in the green, opened and is gaining from strength to strength. I suppose that that will contribute, and perhaps before the end of this conversation I'll try and drag it as much as I can. No, I won't, but yes, there's a very good possibility that 23,000 in the next couple of minutes, perhaps an hour.
7 points away right now, 6 to 7 points away. Now
I suppose I should keep going.
Yeah. Oh, you're saying it's you, is it? The more you talk, the more it comes. No, but the point is, Kush, that 23,000, of course, exciting for us to celebrate. But where next?
Oh, it's on it. There you go.
It's
23.
Have we hit? Yes, we have. Hey, yes, we have. Fantastic, fantastic. So this is the big moment, the big morning.
Kush, the quick trade, 23,000. Go long. Do you press the button?
On the bank Nifty, not on Nifty. I'm resisting the temptation. Go long on bank Nifty.
Take profits at 23,000.
Oh, for
if
sure.
You're running long?
Oh, yeah, for sure. Yes.
Okay,
yes.
so take profits at 23,000 and don't initiate fresh longs. That's the word coming in. But bank Nifty is still looking very good.
For today, take money home on the Nifty. Enjoy the weekend. Bank Nifty is where you want to transfer if at all you want to transfer your long positions.
But you'd ideally not go into the open positions this weekend, is what you're saying?
Yeah, on the Nifty, no. Bank Nifty, I'd still say yes.
Also, I've got to ask you, Adani's turned into positive territory as well. 3,400 on Adani Enterprise. This looks like a trade right now?
It does, especially if you're looking at it from an investment perspective, for sure. 4,000, 4,300 is perhaps something that you will see in the next 6 to 12 months.
That stock's turned positive, not looking too bad. I don't know whether we still have Ashwini with us. Ashwini, hi. It's also Samina joining in. A quick take on rural consumption. You've highlighted a few sectors that you like and that you're constructive on. Of course, as we speak, I guess it's good omen. We have cushioned both of you here as we've hit 23,000 on the Nifty, a record high as we see it. Good to look at for sure. But in terms of rural consumption, do you feel like that is a space that's worth calling a short on, maybe in the second half of FY25?
Samina, yes, the answer is yes. So in the short run, what you're starting to see in the rural space, and I think it will play out in the June quarter as well, is the fact that election spending does put a lot of money in the hands of the consumers, especially in the hinterland. Do the math, 542 seats, the two are nominees, I'm leaving those out, multiplied by 3 candidates, multiplied by my assessment is 40 to 50 crores per candidate. So you're thinking about spending close to 1 lakh of crores in this election process, and a large part of that money ends up in the hands of the lower half of the pyramid, if we were to think about it. So I think rural demand will come back. On the medium term also, I believe that rural demand will come back because we are seeing 3 or 4 big trends. One is that agricultural product prices have been reasonably constructive. B, I think we are also seeing a lot of manufacturing move deeper into India. And I think this is a very strong medium-term story in India. We are seeing competitive federalism among states. States are working very hard to attract industry into their own state and encouraging them to go deeper into areas where they can get cheaper labor, more stable labor, less absenteeism. And all of this is very positive in the medium term for India as well as for rural demand. And last but not the least, I think, the hangover of labor migration that happened at the peak of COVID is also now starting to stabilize with all the construction activity that's going on in various parts of India, in real estate and infrastructure, which is attracting labor back from rural India. And there are money transfers that happen from urban to rural India, which also affect rural demand. So I'm reasonably constructive that rural demand going ahead will not be as weak as it has been in the last 2 years.
So, and that is rural demand. And of course, Ashwini, thanks for extending this appointment a little bit, but I just want to dwell for a moment as to what's currently the market set up as at 23,000, because finally banks are starting to come back into the fray. So if you just look at, viewers, just look at the heat map today, or just look at the point contributors today. 2 days on a trot now, we have had HDFC Bank leading the pile of sorts, 0.61% higher, but let's get the point contribution for the Nifty on the screen, and you will see HDFC Bank being right up there when it comes to leading the gains on the index, 15 points. Nothing dramatic, but leading the gains. L&T, SBI participating, a bit of an old economy flavor out here. And Ashwini Agarwal, that's the point. I mean, we saw the first buying from FIIs yesterday. There is still a lot of short positions on the FIIs on the index futures as well, on the market wide. Would you reckon that old economy, banks, private banks, HDFC Bank, etc., if the market were to go higher, would probably lead the way because of the nature of the buyer being different, because it can't be the FII as opposed to the DII now?
It could happen, Neeraj, but these things are very difficult to anticipate with any amount of certainty, because India continues to be very expensive on a relative basis compared to several other markets in the world. The China market has done very well. Commodities have done very well. Gold has done very well. And there are different destinations for money for those trades. So FIIs have been net sellers of late. And I don't know if we can take a cue from what happened yesterday and extend that into the future. So that's not something that's very easy to predict. You're right. If FIIs were to drive the next phase of the rally, you would see more buying in the names that you mentioned, especially the frontline names. But as an event, it's very difficult to predict.
You know, it's giddy times, I would say, as you have markets hitting all-time highs, and then people wondering how they can make that real money. Just before we let you go, Kush, and you've been sort of lucky mascot for us in the studio.
Last moment.
This has been a good day. This has been a good morning. But then you have to, before we thank you, leave our viewers with, you know, at least 2 ideas of what to do in the market right now. You've seen the opening, you've seen what's working, Bharat Dynamic, Biocon, Vodafone, Indus, some of the sizzlers today. Any of those you like? What are your top 2 ideas?
Well, I like PG Electroplast. Do not be overwhelmed by the move that we've seen recently and the 2.5% kind of an uptick that we're seeing today as well. I think the stock is poised for a run up until 28.50. So that is, you know, one stock that you should have on your radar from, let's say, a medium-term perspective as well. And you know, if I were to pick one more from a portfolio pick, then Jyoti CNC makes the cut. You know, a very recent listing, so to say. But you know, even in the recent times, the stocks moved just only about to its 20-day moving average and then rebounded. So Jyoti CNC and PG Electroplast are the 2 picks that, you know, I will suggest as the closing remarks.
Okay, so 2 picks there from Kush. Thank you so much. Ashwini, thank you so much for joining us. You know, what a great day to have you on. Hope to see you back soon. We're taking a very short break, but our coverage continues, not just on the markets, but we're talking to the management of BKG Foods about their March quarter on the other side. Stay tuned.
Some people...
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is
moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Adani Enterprises, the flagship of the Adani Group, has erased all losses in stock prices nearly 15 months after claims made by short seller Hindenburg. Now, the claims in January 2023 were just the beginning of a series of concerted attacks on the Adani Group that runs ports, airports, and yes, this media group as well. But these claims, reports, and a narrative pushed by vested interests have now been rubbished by the collective wisdom of the stock market. Today, we will put out facts and get you voices that make it clear that the stock market, investors, and those who are backing the India growth story have completely demolished these constant attacks. Look at three things very clearly. One, the fact that Adani Enterprises has recouped its market cap since Hindenburg. Two, Cantor Fitzgerald has now come out with a report. It's an American financial services company since 1945 and has put out a report rubbishing the latest hit job and in fact set a target price for the Adani Enterprise stock nearly 40% over the last close. The market is also recognizing the fundamentals of Adani Enterprises, and these are some of the facts we're going to put forward to you. In fact, Samina, let me come to you on that part. The fundamentals of the group companies and Adani Ent specifically since January 2023.
One thing for sure, Tamana, they've improved significantly. But let's talk about the stock performance first. Adani Enterprise has clawed back losses of more than $30 billion. And it's not just Adani Enterprise. 5 of the 10 listed Adani Group stocks are now trading above the levels seen before the Hindenburg report. Investors that we've talked to, advisors that we're talking to, are looking at Adani Group as a pure policy play. And since there is a clear direction on the country's policy, we are seeing a sharp recovery, is their belief. Adani Ports, Adani SEZ, and Adani Power are stocks that are trading at record levels and have given out 35% gains year to date. Well, that's not all. The factors we believe that are driving the stock, apart from very strong fundamentals and a very clear, visible growth story in the earnings, is the fact that Adani Enterprise will now replace Wipro to become part of the Sensex. And that's a report put out by IFL, and that was one big reason the stock rallied lock, stock and barrel in trade yesterday. There are also reports from Cantor Fitzgerald that Tamana mentioned, where they rubbished FT reports and reinstated their faith in the Adani Enterprise stock, and they continue to believe that Adani Enterprise is a proxy play to India's infra story. Apart from that, their numbers, like we said, have looked phenomenal and have seen a clear improvement from 2021 to 2024 as we see it. Consolidated EBITDA has grown to 13,237 crores in FY24 from 3,259 crores in FY21. Interest coverage ratio stands at 3.6 as compared to 2.8 in FY21. Their debt service coverage, which is an important parameter to determine the health of the balance sheet of a company, has also improved significantly to 2.5 times versus 1.7 seen in FY21. The net debt equity ratio also at 0.7 times in FY24, and net debt EBITDA, which is again an important fundamental parameter to look at the health of a company, stands at 2.3 times. So all that put together has meant that investors, mutual funds have all enjoyed the rally that Adani Group stocks witnessed yesterday, and they do believe there's a lot more to come.
So what are the key questions that we're asking today? And we'll just introduce our panelists as well. We're talking about whether these constant attacks are now completely losing their credibility. Is the market now rubbishing them, and what are the fundamentals at play here? To speak on this, I'm joined by Sanjay Asher. He's senior partner at Crawford & Bailey. TV Mohandas Pai, chairman of RN Capital, joins us on the show today. We're speaking with Ajay Srivastav, MD at Dimension Consulting. And we'll go across first to Mahesh Jethmalani, senior advocate and MP in the Rajya Sabha. Mr. Jethmalani, let me come to you first with, and really let's get to the point. The latest attack, so to speak, is from London-based Financial Times, which has cited documents from George Soros-backed OCCRP and has repeatedly targeted Indian interests under Mr. Modi's government. Do you think this is agenda-driven?
No, this is purely agenda-driven. I mean, you saw what the Supreme Court did the last time with the Hindenburg report, backed by George Soros, again, OOCRP, Organization for Uncovering Organized Crime. I mean, they themselves will be investigated. According to me, it's one of the biggest organized racket, this OORCP. So, and you know what happened to the Supreme Court last time? The Supreme Court last time actually said that the whole report was based, there was a Supreme Court committee which went into the whole issue, and the Supreme Court, after examining the committee's report, said that the entire issue was based on selective information and completely false, and there was no need for any further investigation into the Adani issue, and they said that they gave him a complete clean sheet. And, in fact, as you know, $150 billion of market cap was lost as a result of that obvious bear. It was a bear hammering operation, right? And it was people acting in concert, overseas people hostile to the Adani Group, and they thought impliedly to the Prime Minister, right? And to India's growing economy.
Right.
And they are with their local allies, who they were, people who've been expelled from parliament, right? And who got no relief from the Supreme Court against that expulsion. the Hindenburg report, reporter, and a business rival, Mr. Darshan Hirandandani. Most of their information and questions became the foundation of that hit job.
Right.
Now, I suppose the present one you are talking about is that poor quality coal, right, which was imported for Indonesia. First of all, the much speaking but ill-informed Mr. Rahul Gandhi should realize that this transaction of import from Indonesia took place in January 2014. What this country should do, right, is arrest the Minister for Coal at that time under Dr. Manmohan Singh's government and find out how this happened. By the way, it happened in January 2014. Throughout the period, UPA was in power, and it happened to an export to a port in Tamil Nadu. So the coal, the so-called low-quality coal, was sold as high-quality fuel to the State Coal Corporation in Tamil Nadu, right? All right, so who was in power in Tamil Nadu was probably the DMK or the AIDMK. I don't remember that.
Okay, no, so that is of course the sort of political view, Mr. Jethmalani. But I just want to put out for our viewers what Cantor Fitzgerald has said, and they are talking very specifically about how. This is an old case which has been raked up again, and we'll run those lines of what this financial services firm has said in its report. They say that the group imported low quality was a claim. FT claim not possible given payment based on testing. Essentially, the person importing it tests it, which is why those claims are not plausible. Now, that really is the question, isn't it, Mohandas Pai? And let me come to you on this. That these claims are now being dismissed, their credibility is falling. But what is the genesis of this claim? Because we keep seeing this pattern emerging. And what do you read into this pattern?
You see, FT has become a yellow rag because they become a mouthpiece for vested interest to put out fake information without testing. Even the way they went after Adani earlier was terrible. Look, the whole Adani issue is a conspiracy driven by George Soros. Why am I saying that? Because remember, George Soros made a statement in Davos, Modi will have to answer on Adani to Parliament. Now that means attack on Modi, because they think Adani is close to Modi, is attack on Adani as an instrument. And it is an indication that he's controlling some people who may go to the Indian Parliament and try to create ruckus for the government because he is against the Modi government, and he's made it very clear. Now, George Soros has fed a lot of people in this country, NGOs who are at his beck and call and his payroll. I think you know all the people. He's got many lawyers who is funded, and he's funded the NGOs who are the beck and call. And through them, they're connected with possibly many politicians who are the beck and call, except that all these politicians forgot. They were, by their action and trying to create panic and trying to give fake information, helping an overseas vulture short seller make more money. We don't know whether George Soros himself sold Adani short. We don't know whether he is an investor in that Hindenburg. We don't know to whom all Hindenburg gave out the information before they released the report. And in India, all of them joined together to help a foreign vulture fund make more money by damaging the stock. I mean, it's ridiculous, isn't it? It's a total conspiracy, and it carries on. And if people like FT have fallen prey to the conspiracy, I read an article which said that FT editor is on some advisory board for Soros. So Soros is a big manipulator. He's been a manipulator all his life, and he's been manipulating all this for some time in the hope of making brownie points politically. And our politicians have fallen into the trap. It's ridiculous. All these people in India who are the mouthpiece of Soros, who are sold their souls for a few petty dollars, should be exposed. So people know about this. But there are 2 or 3 points that Adani has to really look at seriously. There's a governance challenge for Adani, because Adani has become so big in India.
No, I'll come to you on that, Mr. Pai. I'll come to you on that. It's an important point. I just want to take this forward because we're focusing right now, on what the markets have been doing. On what the markets have been doing, and you talked about how this is seen as a conspiracy. I want to get a market voice in on this, Samina, you were just talking about buy calls from a couple of brokerages as well, and the market perspective on
You're right. In fact, it's not just Cantor Fitzgerald. In the last few months, you had the global brokerages, the likes of Citi and Jefferies putting out very aggressive buy calls on Adani Enterprise. Ajay, come in on this one. You've studied the stock, you've studied the market trend, you've studied fundamentals largely of the large companies. In the last couple of months, Adani Enterprises created more investor wealth than most of the large companies that we talk about today. Do you feel like Adani Enterprise is a great proxy to play the infra story, and this could potentially be the start or the surface, or we're just about scratching the surface in that case?
Well, I don't comment on stocks, but the point is, answer is yes. It is a good proxy for quite a bit of industries because it is a number of industries and has been incubating the new ideas, including the sector of the data warehousing, which is coming out there. The airport sector sits there. So I think, in a manner of speaking, you are actually investing into like a private equity fund in the infrastructure story of India when you invest in a company like Adani Enterprises. Of course, you may have different perceptions of the valuation, but the answer is the fact that this is one company which has incubated 4 large companies which are out Total Gas, green energy, ports, and now is incubating 4 more or 5 more new sectors in the economy. So for an average retail investor, it's a good way to get into these companies, get into the industry, and at a very nascent stage. And this is an opportunity which you can't get otherwise. Like if I want to go into, let's say, the data center business, I can't go buy shares in that. But knowing the fact that there is a company which is investing heavily into it and will, as a stated policy, spin it out, demerge the business, so I'll get the shares of the company, it becomes a very good proxy for retail investors to get into this company. Having said that, one has to be cognizant of the valuations. Leave aside the political rhetoric which we just heard or the whatever happened. Every large company goes through this. Microsoft is going through this, Meta goes through this, Dhirubhai Ambani went through this, Reliance went through this, and today, where Reliance is versus when it started. So, so these attacks are not new. Investors are well known about it. The problem started only when the attacks happened. These shares were owned only by retail. Please note in 2021, barely any mutual fund, or 22, barely any mutual fund owned these stocks. And therefore, there was literally no stability when these allegations came out. Investors lost a lot of money. We don't know who made the money. So while one investor should be aware that these are expensive stocks by any fundamental logic, all the stocks are expensive. They can see ups and downs. They will see these attacks on them. But the bottom line remains, this is what you rightly said, most effective way to go into the new sectors of the economy where the shares you could not have bought on your own. So for answer is yes, for an investor, these are the opportunities you will get it. Sometimes it's too expensive, you can average down, but the fact remains, these are a few flagship companies which will roll out India's story of infrastructure.
Ajay, I know, this is an interesting story because it's also political, it's also about policy, it's also about the India growth story. So it's all mixed into one. But I'm just wondering from the market perspective, what is the market looking at? Like the kind of sort of run-up we've seen in the last few days, what are the factors that the market is keeping in mind, number one? And number two, when you have these kind of reports, we've been talking about the FT report in the last couple of days, is it fair to say that the market has now started dismissing this as just the latest in a series of these attacks? They have lost their credibility.
After the Supreme Court judgment, for an Indian investor, it is very clear that there is nothing cognizant in terms of a criminality. Yes, we have heard in the papers that they are some of the group companies or the investing companies are filing with SEBI for past lapses on the issue of shareholding, which I think one of the guests alluded to being the lapses of governance. But the fact remains, for an average investor, after the Supreme Court clarification, it is very clear that yes, these attacks will happen, but our focus and investor focus on fundamental. That's why I said to us, the focus is valuation, fundamental, and more important, I think what we got missed out, when the attack happened, Hindenburg allegations came out, there was no mechanism to address who had shorted the market, who profited from the information which came in advance, and therefore the retail investor got caught short. And I think that's a little productive mechanism which do wonders for Indian investors because, at the end of the day, there is a big cohort out there that you just heard this all about people who made option money on $1 billion Indian options. Now, these are some of the entities which are outside India's purview and affect our retail investors and our valuation. But we have now at least moved on to say, illegality-wise, we don't have a problem. We don't think we will have a Paytm kind of problem here. And to that extent, there is comfort. Yes, valuation is expensive, but the fact remains that we are moved away now from allegations to performance. And that's why a Bombay airport is more important. When will airport get spun off is more important than what the FT allegations are.
Right. On that point, we'll get in Mr. Jethmalani as well. Mr. Jethmalani has seen markets continue to repose their faith in Adani stocks. And we've seen that yesterday, we're seeing it today. And this all comes in at a time when there's also talk of its inclusion in the Sensex. What do you think is the reason behind such reports?
Yeah, it is suspect for two reasons. It is to hammer again the stock market, right? And Adani stocks in particular. And it is also time for the elections. I mean, it's obvious, right? It's a very pathetic attempt to bring out a 2014 transaction. What were you doing? What was ORCP and all these organizations doing for such a long time? I mean, this is stale as anything. It's just a completely motivated attempt to try and bear hammer and try and make some quick money and to try and get some electoral gain for their Indian allies, like the Congress. And it's misconceived. As I said, there's a 2014 transaction when Prime Minister Modi was not in power. If there's any wrongdoing, get the Minister for Coal and arrest him.
Sanjay Ashar, the question now is that now that we've seen the market cap, and I'm talking about it from the market cap perspective, because you will recall after the Hindenburg report, the biggest story internationally, the biggest focus was that market value has been eroded. So that was a parameter that, the media, newspapers, narrative, etc., everyone said that so much of market value has been eroded. Now we've come to a stage where this has now come back to its previous levels. You have reports out there with buy calls, just speaking from a market perspective, with even higher targets, etc. The question is that will these consistent attacks now lose their sting? Are people still looking at this with any value or seriousness?
No, people will not look at these stings at all. Investors and the market players do their due diligence. They are intelligent and clever both. So having said that, in spite of the FT report, the investors, instead of selling the stock, there is a buy on them. The prices have gone up. So that is what it is. The proof of pudding lies in eating. And now the fact that even after the FT report, the prices have gone up, the market capitalization of all the Adani stock has gone up. So my point is that these things, even if they happen in future, is not going to affect the market. Fortunately, the retail investors will not lose money because of these stings in case there is somebody who is trying to sabotage, somebody is trying to hammer, etc., etc. So to answer your questions, these things may happen. It's not going to affect Adani Group at all, the prices of Adani Group at all. And considering their robust fundamentals, as you pointed out in the initial stages, on the net worth and all the parameters, financial parameters, I think the investments in infrastructure projects such as ports, airports, cement, other infra projects is so very robust that irrespective of any stings which may happen, the market price will not get hammered.
Mr. Ashar, just a point about, one is the part about the market price, etc., that we've been talking about, but also about the investment plans of the company. Now, over the last year and a half, so many projects announced in states across the country, no matter what the government is or what the political dispensation of that state government is. Do you think that has also underlined this entire point?
It does. It does in the lend. See, all these infrastructure projects or the projects which have been declared by the Adani Group will surely get completed, in my view. Lenders have also understood that, look, these stings, these reports may keep coming, but they look into the assets, they look into the fundamentals, they look into the group's plans and the past, wherein, in spite of the reports, the group has continuously been doing well. They have never defaulted. They have never restructured their loans in spite of the Hindenburg reports. And so, yes, to answer your questions, that in spite of the projects which have been declared, I don't think there would be any hiccups in completing those projects. Lenders also will not have any issues in spite of these sting reports, and will not withdraw any of the lines which have been provided to the Adani Group. And keeping in mind the cash position of the Adani Group, I'm sure those will get completed without any issues.
Well, that's what the big brokerages also seem to believe. Ajay, I'm going to quickly come to you on this. Moody's early this year revised the outlook for the debt of 4 of Adani Group companies from negative to stable. And of course, what we've also seen is their balance sheet has improved significantly over the last couple of years. Do you feel like they will now be able to continue to raise debt at more competitive levels, which would then help fuel growth, improve earnings and justify valuations?
Well, the challenge for the group is now that in several sectors, they are competing with equally heavyweight companies. So it's not just about the political ramifications, it's not about whether there is something to do with allegations. The fact is that they are in the power sector, they compete with heavyweights like JSW, they compete with Tata Power. Okay, in the port sector, now the JSW is becoming a formidable competition. So in airport, of course, it's a localized, but they got competition in airport now as well. So, to that extent, the fact is that their challenge is going to be how to keep the high valuations of the company going, and they are expensive. All stocks are reasonably expensive in the group compared to all fundamentals. So I'm not saying good or bad, but that's what they are. But the challenge is for them to keep the rating up, for them to keep the debt engine flowing, is the performance. And they are now, for the first time in the last 2 years, into competing with big majors in India, which is a big change. Maybe 5 years back or 4 years back, they were ruling the roost. But today, the group is in most industries, is going to compete. Whether data centers coming up, there are 4 other large companies going into the business as such. So when you compete with the Tata, the Jindal, etc., you are now competing with formidable people. So to that extent, I think the challenge for them is operating performance, and that will dictate whether their debt rating goes up, whether they can get money for their new projects, and so on and so forth. And, so the whole paradigm of earlier was low floating stock, therefore valuation could be whatever it is, compared to today's paradigm is the stock is a little more broad-based, there are overseas investors in it, mutual funds are coming into it, and the debt holders are now going to evaluate it in a very different way compared to maybe 4 to 5 years back. And to that extent, it's both good in a manner. If you perform well, you'll get very good rates. And if you don't perform well, it'll be difficult for them to raise money. So now it's an operations challenge, performance challenge will dictate more than the extracurricular issues which are affecting the group at this time.
That's an interesting term, extracurricular issues. I want to focus on those extracurricular issues just for a second. Come back to Mohandas Pai on the point you were making. I'm going to just pull up this graphic that our team has prepared. And Mr. Pai, you alluded to this OCCRP Soros link about vested interests. Now, to people listening, they may come and question you that what are these conspiracy theories you're on and on about? Why are we, talking about these conspiracy theories? If I were to pose that question to you, do you see that clear link, and where do you see that link coming from?
Look, if you read the allegations of Hindenburg, I don't see any original allegations based upon any forensic ideas. Most of them have been disclosed. Most of them are in the public domain. They all put it together in one list, wrote some vague language. And then they used certain vehicles like this OCCR, that organization which has no credibility. They used that, and that's funded by Soros. And then they use lawyers here and everybody funded by Soros. And Hindenburg is a vulture short seller. Everybody knows that. And nobody knows whether Soros paid money. And the fact that Soros spoke out shows in the conspiracy. If you're not spoken out, you could say that, okay, the chance event, blah, blah, but he spoke out, right? He said Modi has to answer about Adani in Parliament. And that is a very sacred thing for a country. That means there are politicians who are being economically incentivized to raise all these issues. What is the link? That's what we got to be careful of. But I want to make one point which you cut me off. I hope you don't cut me off. Look, Adani has become a very big group. They have to improve governance. They need to have independent directors who will speak for the company. When a crisis happens, independent directors should step up to the plate. When the short selling happened, we didn't see any independent directors step up to the plate. It was the controlling shareholder and the CFO. And the CFO made a very bad statement, attack on Adani is attack on India. No company can think is bigger than this country. That's important. So they have to improve corporate governance, get good independent directors who are really independent. Because they're very big today. They can't play the same game. Second, like Asha said, there has to be greater liquidity in the marketplace. When you are highly valued, the multiple is very high. When you're thinly traded, any information will hit you badly. It will be a one-way street. So I think this idea that a large controlling shareholder can have very low liquidity and high prices that need to be tested in the market. So there has to be greater broad-basing of the shareholding for very large companies, because that is the source of strength for them. That means there are many, many other people. That's extremely important. And the third thing, which is very important, is they must set standards in disclosure and financial reporting. Because I read their annual reports, I read their quarterly thing just for interest. I don't have, barring 300 shares I bought when the market came down in that Adani port, just as a curiosity, I don't have any other holding. But I find that the disclosure standards have to improve substantially. Important message is companies which have become a big part of a market should up their governance standard, disclosure standard. They must have independent directors, and they must broad-base the shareholding to make sure that the volatility in the stock due to high sensitivity to earnings is something that is countered by a very widespread holding, like Asha said. We must have many more mutual funds invest. We must have many more Indian investors invest. And the fear that somebody is controlling will decide one way, have related party transactions, all that area become much more important. You have to set standards. You have to set standards if you are very big.
With greater responsibility, as you know, with greater prominence comes responsibility. Yes. Point taken. The focus also on what has transpired in the last 15 months and what markets in their collective wisdom are seeing now. Just as we wrap this up, because we've run out of time on this particular show. As we wrap this up, just to note that you have seen this turnaround in Adani stocks even before the election results. So anyone making those links also now will have to go back and question that narrative. But thank you so much to all of you for joining us on the show today. We've completely run out of time, but stay tuned. A lot more coming up on the other side on NDTV Profit.
Some people say, hey, you know what?
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
back. Flat markets, maybe taking a pause before the weekend and, of course, phase 6. But markets which are staying steady after the highs of 23,000 plus this morning. There was a concern that there would be profit booking. We haven't quite seen that. You haven't seen a huge pullback either, but it's steady as she goes in a sense. Deepan Mehta now joins the conversation from Elixir Equities. Deepan, good afternoon. Great to have you on NDTV Profit. As always, let me first get your take on an HDFC Bank. HDFC Bank, because stellar move today in an otherwise, I would say, a little cautious bit of a market. Do you think private banks are now coming into their own, or is the focus still on your public sector companies, defense, etc.?
Yeah, Tamanna, good afternoon, and thank you for having me on your show. See, I think this is maybe a move towards some amount of safety because clearly I think it's a value play. HDFC Bank has been a great performer in the past. And I suspect that FII buying may have been emerging in this stock, or at least there's a cessation of FII selling because a lot of FIIs have been selling continuously for the last several months or so, and this has been amongst the top holdings where they are liquidating. So it's more to do with the technical factors on the counter rather than fundamental. I think fundamentals are pretty well known, and generally we have a good handle on which direction the company is going in. Last couple of quarters, I would say more than that, have been a bit disappointing, but the stock certainly holds promise. So from a long-term investment perspective, it's better to remain invested. But today's move seems to be more about some specific concentrated delivery-based buying.
So HDFC Bank is that kind of a move. What about some of the defense counters that we talked about, Bharat Dynamic and HAL? That entire pack really having another great day, Deepan. Are the moves now beginning to worry you a bit, or you think that there's much more left?
Oh, Tamanna, I think all the moves that are taking place in the market are worrying. And, at tops like this, I know bull markets cross the walls of worry. They climb the walls of worry. But I think valuations are a bit stretched. No doubt for defense companies, the results are very good. They are reporting finally 30-40% type of growth rates, and the massive order book position which they are sitting on, it's now finally coming into execution mode. But look, valuations for defense companies are trading at 30-40 times or so, little lower for shipbuilders, of course. But a lot of the positives have got captured in. And end of the day, even if you have a burgeoning order book position which runs many years into the future, you still have to execute and deliver. And those capacity constraints, production constraints, execution challenges will always remain. So I don't expect these companies to continuously report these kind of growth rates going forward. It will be more sedate. But that, I think, has got priced in. And it's a great sector to be in. And in fact, it's one of the target sectors in a correction. If these stocks are available 15, 20, 25% cheaper, then they would make more sense and provide some amount of margin of safety as well.
Is, are you going to get that opportunity, Deepan? And we've been speaking over the last several months, and I hear this from you often, the concerns over the valuations. I'm just wondering how you are looking at it, because difficult to really time when you will get that opportunity, isn't it?
You're absolutely right. I think a lot of people waiting in the sidelines like us are just waiting and waiting for a correction. It's not coming through. But it's okay, I mean, it's not that we are completely into cash. Some amount of cash is there in the portfolios, which is strategic in nature, 10, 15, 20% or so in different portfolios. And that can easily be deployed when there's a correction, even if it is a shallow one. But look, we have a major event happening. And, let's see how the election results. First, we deal with the opinion polls and then the election results. There could always be a sell-on news syndrome. So much of the positives of the election result has got priced in that even a minor miss, that in itself could be this bit of a disappointment. And, there are no buying triggers per se, because market is expecting BJP, NDA to have the same number of seats or slightly more also. And if there's a marginal miss over there, then it could be, you could have a sell-off. I think we're entering the election results on a very, very strong note, to an extent an overbought position. So I would say that even if everything goes right, you could have a correction post results as well.
Just to take this further, because everyone's expecting a very exciting 4th June, perhaps a 3rd June more so, because you'll have your exit polls, etc. out by then. You're saying that at the first opportunity, even if you have a clear majority of the current government, policy continuity, etc., do you see more of a chance of a sell on news situation?
Yeah, absolutely. I think, it happens time and again, especially with companies we have seen when they announce their results, the results are exceptionally good. The stock price corrects because the positive news is in the price. So same thing can happen on an election result as well, that, that BJP, NDA coming to power, what has been priced in is same or higher number of seats as well. Who knows? I mean, if the same result comes, there's, people may shrug it off and say, okay, this was expected. Now what, So that could be a, kind of a sell on news syndrome. And mind you, if there are 10, 15 seats short than what the street is expecting, that certainly will, put a kind of, I would say, somewhat of disappointment, little damage to sentiment. And, once the correction starts to set in, it doesn't take long to gather momentum. So one should be mindful of that. And even if nothing of this happens and the market keeps on going up, then I think it will enter into a parabolic zone where anyway you should not be participating on the buy side. So from whichever way I look at it, I don't find any scenario where I can look at justifying heavy purchases at these levels or at higher levels. Earnings growth is what it is. It's pretty predictable. It's largely got discounted. We know the sectors which are doing well, which are not doing well. And the companies which are doing well, the cyclical ones, they have reported great numbers. The valuations are moved up, so people are forecasting well into the future as well. So when I look at the complete picture, all I can see is that it's the entire market, large parts of it are priced to perfection. It's as if that there's going to be no negative news flow or negative outcomes ever. And that is not, likely in the real world, And mind you, we live in quite a dangerous world. There are geopolitical issues, there are environmental issues, and there are elections not just in India, but in UK and in US. And inflation has not completely died down. So it's not that, we are in complete blue sky scenario the way the street is looking at just now.
Yeah, and the fact is that geopolitical issues have moved sort of to the backbench as far as India is concerned. Now, let's get specific and get a specific focus on landmark cars. The stock fell today as much as 7% in trade as the company's profit and margins slumped. Slight recovery there, still down about 6%. But what is the concern really? Puneet joins in with key details.
So apart from the margins falling, it's a strategic problem that Landmark Cars is facing. We've divided the results into 5 key points according to us, which is a problem. Now, one of the first ones is a slow new car sales. Now, they have seen a margin decrease of roughly 90 basis points, but already it was just roughly a 3 to 4% EBITDA business. So it's come down to just 2.6% EBITDA margins in this particular quarter, and for the financial year as well, it's been around the same range. They said that they weren't able to partner with any of the top brands last year, and negotiations took time, and that's why, and the existing brands did not launch as many models. So that led to lower sales and revenue fall on an overall level for financial year 24. They also said that they've had a change in strategy and have added new brands, and which were these? One was M&M, which is a key addition. Kia Motors was the second one, and MG Motors. These are the 3 brands for whom they will be launching outlets into this particular financial year. Apart from that, Renault, which was a key focus for the company, they are shutting already. They've already shut 6 outlets for the company in Punjab, and they've also spoken to the company to provide financial assistance until the volumes recover for the same. They've also had a conversation with Volkswagen where they have roughly 20 outlets, which is roughly 20 to 25% of the total outlets, where they have said that until sales recover, they will have to have negotiations and provide financial assistance as well. The third one is the after sales business. This was the high margin business, or roughly 18 to 22% every quarter. Now this has fallen by roughly 300 basis points for this quarter. Revenues also just slightly up by 5% into this quarter. Now this is roughly a 800 crore business, and every margin dip is a key problem for the company. The fourth one is the high inventory. Now because the older models was where brands like Volkswagen did not launch any models, so they had a very high inventory build up, and now that is getting liquidated with at discounts. The problem is the gross margin has fallen 300 basis points because of that, which is a key concern to the analyst. And finally, the strained financials. We said gross margin is down, average selling price is also down. They have said that they will be doing a big investment of 225 crores in this particular financial year to open these outlets of Kia, Mahindra as well as MG Motors. So overall, things don't look very promising. We will have to see how they are able to maintain the ROIC number that they have said of 20%. It seems a little difficult, but we'll see how the company recovers from here. Back to you.
All right, so Landmark having a tough day. Amar, do you track the stock? What do you make of Landmark?
Yeah, when you spoke about this, then I pulled up the chart. So what we are seeing here is that as per the fundamentals also, it clearly appears that the stock isn't really going anywhere and seems to have topped out from a medium-term perspective. And if we look at the stock has got good support coming around the 700 mark. So that's a level to keep a close watch on, because that was the low, that the 691 was precisely the low that it had made in the last week of March. And from there, and earlier also it had made a low of 685. So 680, 700, that's a very crucial zone of support. If the stock takes out that level, that means the further selling could be witnessed in the stock. And there's no, I would say, long-term trend or the intermediate-term trend for the stock remains, I would say, in a consolidation phase. So there's no uptrend in the stock as of now.
No uptrend in Landmark for now. Deepan, just wondering if you have a view on autos overall. And I'm not sure if Landmark is something that you look at closely.
Amanda, Landmark is a company in which we and our clients are invested, and we are feeling the pain just now. Because this is clearly a company which is disappointed big time. And the reason we liked the company in the first place was because we couldn't buy Mercedes India. So we thought the next best thing to buy would be one of the largest dealers of Mercedes India. And that also is not playing out well at all. Quarter after quarter, there are disappointments. Different reasons keep on coming through. They're investing in new automobile agencies. Now I hear about higher inventory levels, discounting. All these are not giving a good comfort level. And we may review our view on Landmark cars and may look at even selling it off because it's not living up to its true potential. I thought that there's such a long waiting list for Mercedes cars, and even the value of the Mercedes, the average selling price was moving up significantly, and that would benefit Landmark cars. But none of this is visible in the numbers of the company. So maybe it's better to just buy OEM. We thought of experimenting with a car dealership company, but so far that experiment has proved to be a complete failure. So we need to go back to the drawing board. But yes, to come to the first part of your question, very, very positive on autos per se. But valuations, again, a bit of an issue. M&M in particular can be watched closely because it has got a very high beta when it comes to the monsoons. So the farm equipment division will tend to do much better, and it's been a bit of a laggard. And a lot of the SUVs are sold in the rural areas. So if there's a jump in rural incomes, I think M&M could be one of the biggest beneficiaries from the auto industry.
M&M is the big pick in autos. Deepan's not very happy with his experience with Landmark. So, that's something that the street is reflecting today as well. Let's shift gears just for a second. And we are on the eve of the last two phases of the general elections. All eyes will be on phase 6. And what's also interesting is that you have 8 constituencies from Delhi NCR which will go to polls tomorrow. Now, what are the key contests there? What are the big fights? My colleague Nupur joins us with all of those details. Nupur, Delhi is always exciting and has been a clean sweep for the BJP in the last couple of elections. But this time, the difference is that all opposition parties have come together.
Absolutely, Tamanna. So it's going to be really interesting to watch out for how that pans out. Given the fact that the AAP and the Congress have decided not to field candidates against each other, they're supporting each other. So very interesting dynamics over there. But we'll just take you through all these constituencies. We begin with the Northeast Delhi constituency. Now, Manoj Tiwari, interestingly, the only leader from the BJP who they've put their money behind again. Now, he's the only one who's been retained. He's, of course, up against Kanhaiya Kumar from the Congress party. Do remember, this is his second foray, that is for Kanhaiya Kumar. Earlier, of course, he contested from Bihar in 2019 and lost. The next constituency that we're going to focus on is New Delhi. Meenakshi Lekhi The sitting BJP MP, of course, has been gotten rid of. She was one of the first ones to be not renominated in the first list of the BJP. Instead, they fielded Basuri Swaraj. That is, of course, Sushma Swaraj's daughter, relatively inexperienced, up against, of course, Somnath Bharti of the AAP. Somnath Bharti, a lawyer, a loyalist of the Aam Aadmi Party. Next up is Northwest Delhi constituency. Of course, Hansraj Hans was the sitting MP, not being repeated this time. Udit Raj, very interesting pick from the Congress party. Do remember that he is someone who is seen to be a bit of a rabble-rouser in that sense, but he's been picked. He has, of course, he's going to be going up against Yogendra Chandolia. Yogendra Chandolia, of course, has been the former mayor of Delhi, and that's a trend that we are seeing with the BJP picking up those candidates who have been former mayors. Next constituency, Chandni Chowk. Chandni Chowk now is the smallest constituency in Delhi. Harshvardhan, the former health minister, was one of the first to say that he's going to be retiring out of politics. So he's cleared the way for Praveen Khandelwal of the BJP up against a very senior Congress leader, Jaiprakash Agarwal. East Delhi, another interesting constituency. Gautam Gambhir, of course, has decided to retire entirely from politics. So he's out of there. The Aam Aadmi Party, Kuldeep Kumar is who they have fielded. He is currently an MLA in Delhi. He's, of course, going to be fighting against Harsh Malhotra, who's another former mayor of East Delhi. So that's something that we are seeing the BJP picking up municipal leaders for this election. Next one, of course, West Delhi. West Delhi is Mahabal Misra of the Aam Aadmi Party. Now, he was with the Congress before. He's jumped seats this time, but obviously we are going to see the Congress support him. Kamaljeet Sherawat, another former mayor. She was the mayor of South Delhi. Next up, of course, is the South Delhi constituency, so a bit of a swap over there. The sitting MP, of course, is Ramesh Bidori, again been gotten rid of by the BJP. We instead have someone who is considered to be a senior leader from the BJP. Ramveer Singh made his beginnings with the ABVP, so that's how long back he goes. Another Sahiram Pehelwan from the Aam Aadmi Party. As the name suggests, of course, he's a wrestler and he's hoping to wrestle this seat essentially away from the BJP. And the other constituency that we're going to focus on is Gurugram. Very interesting. Raj Babbar. Now, he's been out of politics. Of course, he's hoping that this is going to be a resurrection of sorts for him. Rao Inderjeet Singh, he's the sitting MP from the BJP, so he obviously does have quite a bit of a sway. So Tamanna, very, very interesting to watch out for how this really pans out.
You know, what really strikes me is that the BJP has been clinical in moving out a lot of maybe candidates that they didn't think would fit the bill. So let's see what the results really bring. Thank you for that, Nupur. All right, let's get our focus back on what's happening with the markets. You're looking like you're in perhaps for a flat close, just a few minutes away from close, and you're seeing that consistent story of an HDFC Bank leading the pack. Bharti Airtel, L&T are some of the counters that are doing fairly decently today in trade. Vodafone Idea is the other standout story. In fact, Deepan, I was keen to get your view on I mean, this UBS note has given another lease of life to Vodafone Idea, up 8% today. They're looking at an 18 rupee target price. Are you convinced with the whole story that AGR dues will be pardoned in a sense by the government in 2026?
That is event driven, and even after that, I don't know how Vodafone will come to profitability because they are like the loss margin is about, I think, beyond 65-66% or so, which means that revenues have to grow up by the similar quantum or expenses have to go down by 65-66%, and that doesn't seem to be likely. So I'm not getting it. I cannot create a scenario where Vodafone will start to break even after considering all non-cash charges as well. So from that point of view, considering the kind of fundamentals underlying and track record, I want to avoid Vodafone. I know it's a low price stock. It does tend to attract a lot of traders, and the IPO did very well. And of course, some amount of trading profits are there. But from a long-term fundamental basis, I don't see the stock really outperforming. I'll still go with a Bharti Airtel. End of the day, the entire story in telecom is about rising ARPUs. And if that is going to happen, then Bharti Airtel also will be a very big beneficiary. Last couple of quarters, there have been some headwinds or some aberrations when it came to their Africa business. But I think those will get ironed out in the current financial year. And a lot of value is created in the African subsidiaries as well. So when you look at the complete picture, I think more positive on Bharti Airtel than Vodafone. But yes, there could be trading rallies in Vodafone. But look, can you really buy Vodafone and make it part of your core holdings? You can't. But Bharti Airtel, you can. You can buy as a large proportion of your portfolio, be part of your core holdings as well. And that clearly, I think, is the attraction.
What metals, Deepan, are they now part of your core portfolio in any sense? You're seeing a change in the commodities cycle. Hindalco numbers were also out today and seem to be as per estimates largely. We'll just pull up Hindalco and see what's happening over there. Are you constructive on metals right now?
I think that non-ferrous metals are looking very interesting. Zinc, aluminium, copper all have rallied by average, I think 25% or thereabout, if I'm not mistaken. And that's yet to get reflected in the numbers. Hindalco in particular, I think, looks interesting. It's a quality player, and Novelis IPO will release a lot of capital for investing. The core aluminium business should do exceptionally well. And also positive on Vedanta, because if they split the company, which is their plan, and one or two businesses are sold off, and that way the debt at the promoter company level is reduced, then certainly it will improve the sentiment. In any case, zinc also is doing extremely well. So you could have robust profitability in the current fiscal. So yes, positive on non-ferrous metals. Ferrous metals disappoint with the numbers which came through across the board. But look, that also has potential, but I'm not sure that the risk return is favoring these steel companies.
Amar, I wanted to get your take on Hutco, another stock that has run up quite dramatically, and the numbers were out a short while ago. The street doesn't seem to have liked the numbers too much. Their total income is up about 18%, net profit up about 9.5%, and there's a dividend as well, but we'll have to look at the line items and figure out what the street doesn't like. In terms of the charts, do you have a call on Hutco?
I would say, if you look at Hutco, what we are seeing is that the stock seems to be witnessing some profit booking. Overall, the long-term trend still remains intact because the stock earlier was unable to breach the 210, 230 zone. So that has been taken out and the stock is currently around 256 odd levels. So I wouldn't recommend fresh entry at the levels, but those who are long, they can look at booking some profits if this week's high is not taken out, because this week's high should act as a very strong resistance zone for the stock.
Now, as we're wrapping up in the last couple of minutes, Amar, what would be your BTST calls? How would you look at a Monday? We're leaving this market close to and at life highs, but no clear direction.
Yeah, that's true. So one stock from the chemical space, because what we are witnessing is that the chemical stocks, most of them are really firing on all cylinders, and Rashtriya from the government space, the PSU, Rashtriya Chemicals looks quite promising because it has breached a crucial zone of resistance somewhere around 150, 154, 55. That was acting as a zone of resistance. The stock has managed to trade above that level, close above that level, and significantly heavy volumes. So sustaining of the current highs, the stock has an upside potential. So 160, 162, that's going to act as a zone of resistance. If that is taken out, then the stock is definitely headed higher towards 175, 180. So this is one stock one can look at.
All right, RCF is one sort of BTST call that Amar has. Thank you so much, Amar, for speaking with us. Deepan, thank you once again for joining us. Always a pleasure to have you on the show. Now, just less than about 3 minutes left to wind down what has been a very, very interesting week. And I think the real story will be in the weekly charts. You're not quite closing at 23,000, some distance away, 22,950 right now on the Nifty. We'll see what that last closing tick is. But, you're seeing a flat market over here, nothing moving too much. Sensex, though, sitting pretty above 75,350 as well. Let me pull up the line graph through the day because it's been an interesting day in all, and the advanced decline ratio will give you a sense of what kind of a market we've seen overall before we get into the specifics. I'm talking about the advanced decline ratio, and of course the Nifty over here dropped a bit from its highs. It touched that 23,000 in the beginning and then dropped off. It's showing you what kind of a range-bound trade that we've had through the day. You hit 23,000 in the first 5 odd minutes of opening, and then you've had a bit of a consolidation, not massively, I would say. Even if you look at the advanced decline ratio, it's not too much of a gap. Of course, declines larger than advances, and that gap opening a bit towards the end. It'll be interesting to see what the FII figures are for today, though of course that will come after market close. We'll pull up the heat map as we wind down to the last minute or so of trade, and HDFC Bank is the standout story of a day which hasn't seen too many moves. I would add Bharti Airtel to that as well. If private banks have been in focus, then HDFC Bank has led that pack, so has Axis, BPCL doing fairly okay, so is L&T. And, Maruti for a second day in a row is having a pretty good day, though not too many moves. On the losing side, you have Adani Ports, large block deals, family office sales there impacting the stock. Tata Consumer, Asian Paints, not a great time for your consumption stocks. ITC has been sulking ever since its numbers came out. Even IT has not had a very good day as far as the markets are concerned. Broader markets also have been fairly flat, not too much of an action there. Yeah, you're seeing the Nifty Mid-Cap 100 close completely flat. So now, what are the big triggers is the question. The big triggers continue to be, I suppose, voter turnout for Phase 6 will be watched very closely. You're at the fag end really of election season, and the markets are also taking a bit of a breather, maybe a Friday move after the kind of huge upswing that they saw yesterday, and you're seeing that ticking in. I want to pull up the BSE 500 top stocks to just give you a sense of what has really worked, because we're looking at all of this and wondering what really happened in the market today. Well, quite a bit, and especially when you look at what has run up today. Aegis Logistics is a last minute kind of a move. Finolex on the back of good numbers. Bharat Dynamics is telling you the story, and we'll pull up the gainers in a second for the public sector companies as well. Vodafone Idea was one standout story of the day because of that UBS note coming in. Amara Raja has done pretty well. Now on the selling side, Bayer Crop, Suzlon Energy numbers have not been what was expected. Paytm, after the numbers, there have been a number of notes actually with question mark of when this company can come back to profitability. They're also tightening the ship, and that perhaps has been hurting the stock. Hutco numbers came in just a short while ago, and the street is a bit disappointed. But I want to pull up sectoral indices for you and just give you a sense of what has really worked in the markets today. And in an otherwise flat market, it's all about the public sector enterprises. And we'll just pull up the internals of that index for a second to show you the strength there. PFC done well, HAL just completely unabated, Bharat Electric, REC, all of these stocks doing fairly well. So let's look at where the close finally is and pull up the weekly charts, because like I said, it's been an interesting week. It's been a week, I would say, of shrugging off concerns that you saw the week earlier. So over the week, you've gained about 2%. You're closing near the week's high. Very close to 23,000. Your final close at 22,950 is showing you that you're not a far way off from 23,000 at all. I want to pull up the mid cap and the small cap indices also, just to give you a sense of how they are closing the week. And the mid cap 150 has not done as well as the Nifty, but not too badly either. The small cap has been a little tepid. Just Bank Nifty before we wrap up the summary for today. I want to see Bank Nifty over the week, and Bank Nifty has been an interesting story, nearly 2% up as well. So where are we leaving this Friday close at? We're leaving this Friday close at with an inherently strong market, taking a bit of a break after a huge run up, but standing steady. Even after touching at 23,000, we've not seen a huge bout of profit booking. So the focus now shifts in to, I would say, the last week before election results, and that's where all the action will be. So for now, that's all we have on India Market Close. Thank you so much for joining us, but stay tuned, a lot more coming up on the other side on NDTV Profit.
Some people say, hey, you know what?
Starts where financial dependence ends. Women's Day might have passed, but the data compiled by a report named Women and Finance by Crystal and DBS calls for your attention. For the longest time, women have been underestimated and underrepresented in many spheres of life, whether that's at home or at work. But for a change, there is a change this time, and I'm going to show you some mood-lifting data. Did you know that 47% of women make financial decisions on their own, and their independence when it comes to making financial decisions depends on three things: income source, age, and stage of affluence. Income source. 55% self-employed women take financial decisions on their own versus 39% of salaried women. Does that mean salaried women are more hesitant because they don't control how much they get, or do they? Age. 65% of women above the age of 45 years manage their finances independently. That means older women are financially more independent. Affluence. 58% affluent women tend to have higher financial autonomy versus 38% of semi-affluent ones. Why so? This is due to higher financial literacy and access to resources. Where do they save or invest their money? The report revealed that most women stick with traditional instruments for investment purposes such as fixed deposits and mutual funds, and self-employed women invest more in mutual funds at 17% than salaried women at 13%. How many women are investing in mutual funds? While the share of women in mutual funds has risen in the past,
Welcome back. Now, 58 constituencies across the country go to the polls tomorrow. Our focus, of course, is going to be on the Delhi NCR region, where about 8 seats are going to the polls. Let's look at them segment-wise. Now, the first constituency, of course, is Northeast Delhi. Now, this is a very interesting constituency because Manoj Tiwari is the only leader from the BJP who has been retained for these Lok Sabha elections. He's up against Kanhaiya Kumar from the Congress party. This is Kanhaiya Kumar's second attempt. I do remember that he fought the elections in 2019 also from Bihar, but unsuccessfully. New Delhi is the next constituency. That's interesting as well. The sitting MP, Meenakshi Lekhi, hasn't been given a ticket this time around. Replacing her is Bansuri Swaraj, who was Sushma Swaraj's daughter. This is her first foray into electoral politics. Up against, of course, Somnath Bharti of the Aam Aadmi Party. The Congress and the Aam Aadmi Party haven't put up candidates against each other. They are part of the India Alliance. So he will have support from the Congress as well. Next constituency is Northwest Delhi. Now, the sitting MP here, Hansraj Hans, also essentially not given a ticket, up against Udit Raj from the Congress party, who, of course, is fighting against Yogendra Chandolia. Now, this is very interesting. The Aam Aadmi Party has had mayors come in for this election. So, Yogendra also an ex-mayor, so he's fighting on the BJP's ticket. Let's go to Chandni Chowk next. Now, this is the smallest constituency in Delhi. Harsh Vardhan, who was the health minister, has not been given a ticket. In fact, he has almost indicated that he'll be retiring from politics. The BJP has sent Praveen Khandelwal in his stead against Jaiprakash Agarwal, an old-timer of the Congress, considered to be quite a senior politician from the Congress party. Kuldeep, so this is going to be a very interesting fight. Let's now go across to East Delhi. East Delhi, another very interesting sort of a constituency. Gautam Gambhir, very vocal MP, has been let go of. He's, of course, said that he's not going to be in active politics anymore. Another mayor from East Delhi from the BJP being made to fight elections, Harsh Malhotra, up against Kuldeep Kumar of the Aam Aadmi Party. West Delhi, here the sitting MP Parvesh Verma has been let go of, another example of that. And fighting against him is in his stead, rather, is Kamaljeet Sherawat. Now, Kamaljeet Sherawat also was the former mayor of South Delhi. She will be up against the Aam Aadmi Party's Mahabal Mishra. So he, of course, was earlier the West Delhi MP, so he does have some political clout behind him. South Delhi is a very high-profile constituency. Of course, Ramesh Bidhuri is the sitting MP. He's not been given a ticket. In his stead is Ramveer Singh of the BJP, fighting against Sahiram Pehelwan, who's obviously hoping that he can wrestle this seat from the BJP. Gurugram. Now, Gurugram is very interesting because Rao Inderjit Singh is one of the few sitting MPs from the BJP who have actually been retained. And he's going to be up against Raj Babbar, who will obviously be hoping that this can sort of be a resurrection for him. The Congress kept its cards close to its chest till the very last minute. So he was a late entry into the list. Very interesting to watch out for whether he can actually rework on his political resurgence now. All right, so moving on to the other story that we are tracking. At least 12 people have died of a suspected heat stroke in Rajasthan this week as sweltering temperatures grip the country. Officials, however, have not yet ascertained the cause. Barmer, which recorded the highest temperature at 48.8 degrees Celsius, saw 2 deaths. The director of Rajasthan's Met Department has laid out the heat predictions for the coming days.
The current severe heat wave spell will continue for the next 3 to 4 days. Especially the extreme severe conditions will continue over the southwest Rajasthan of the Jodhpur division and the border areas of the West Rajasthan. So the extreme temperature or the maximum temperature will continue to measure around 47 to 48 degrees during next 3 to 4 days.
And that's a severe heat wave?
That's a severe heat wave spell will continue, but we are expecting the fall in the maximum and minimum temperature by 2 to 3 degrees Celsius from 28th or 29th May onwards.
Why would that happen?
So because of some change in the atmospheric conditions and wind patterns, we are expecting that the fall in the maximum temperature will continue, will be observed from 28th May in few parts of East Rajasthan and from 29th May from West Rajasthan.
Now, staying with national news, an update in the Pune Porsche accident case earlier today. The city's police commissioner, Amitesh Kumar, said that the police have video footage to prove that the 17-year-old was drinking at a pub.
स्टेट ड्रायव्हिंग व्हीलवर बसणे, एका पबमध्ये जाऊन दारू पिणे, नंतर दुसऱ्या पबला जाऊन परत दारू पिणे आणि नंतर एक नॅरो स्ट्रीटवर ज्यावेळी तिथे भरपूर क्राऊड असते, भरपूर रहदारी असते, तिथे भरधाव वेगाने वाहन चालवणे ही त्यांना पूर्ण नॉलेज होती की त्यांचे या कृत्यामुळे ते अशा प्रकारचे जीवितास हानी होऊ शकतो आणि त्याचबरोबर ते मद्य पीत होता किंवा पब मध्ये पार्टी करत होता त्याचे पूर्ण सीसीटीव्ही फुटेजेस आमच्याकडे आहेत.
Now on to an update on the chemical factory blast in Maharashtra's Dombivli. The death toll has gone up to 8 and rescue operations are still on. Several workers and residents are feared to be trapped inside the accident site. The process of cooling down the site is still on. Yesterday, a boiler at Amber Chemical Company located in phase 2 of Dombivli's MIDC area exploded. Well, a harrowing video of a helicopter experiencing a tailspin and mid-air has surfaced. This helicopter was carrying pilgrims and made an emergency landing near the Kedarnath helipad. People nearby can be seen scrambling for cover. Reports indicate a technical snag occurred approximately 100 meters from the helipad. All the 6 pilgrims and the pilot are safe and sound. Well, we all watch a variety of influencers on our mobile phones every day. But do you know how much they earn? Maitri Seth breaks down the economy of the influencers for you.
Hi, my name is Paras Tomar. I went from a 2-bedroom apartment 3 years ago to running a company today which is worth 2,500 crores, and I did it using Instagram. As weird as that story sounds, the truth of the matter is I started doing something very simple. I was not as gorgeous looking as I am today. My face was full of acne, I was very overweight, and I invested a lot of my own self in trying to better myself. And I started documenting my journey by looking for home remedies, and I started something called Paris Ki Nuske. And when people started trusting and watching my journey that I was documenting, it translated to commerce, first as an influencer, then as a creator, then as a brand owner. If I were not an influencer, if I was not a face, we would not be launching two brands.
Influencers like Paris have been ruling over our small screens for half a decade. But they are not just content creators. They are entrepreneurs, and some of them earn even more than Bollywood stars.
Hi, my name is Mansi Raj. I am an actor. You may have seen me in Student of the Year, Mujhse Friendship Karoge, 24 Season 2. I was in Scoop. It's not that simple. What prompted me to get into content creation? Honestly, as an actor, there have been times that I have lost out on a lot of work because I did not have followers. This change I have seen in the past 1 year, especially say something to do with advertising, right? I do a lot of ads. So